Oh, good morning. Good morning, everyone. Welcome all the online audiences to the Open Source Blockchain Frameworks Technology, CeFi and DeFi Frameworks and Perspective webinar. Co-organized by HKEBA today. I'm today's moderator, and I'm also the representative of HKEBA. I'm Tim. This material and event is funded by the Professional Service Advancement Support Scheme of the Government of the Hong Kong Administrative Region. Any opinions, findings, conclusions, or recommendations expressed in this material or any event organized under this project does not represent the view of the Government of the Hong Kong Special Administrative Region or the vetting committee of the PSS project. This webinar aims to equip Hong Kong ICT professionals with knowledge on the latest digital transformation trends and also the implementation strategies. Also help ICT professionals on knowledge and understanding of the different types of open source blockchain frameworks, protocol, opportunities and challenges. Also, we will explore future development and trends. This webinar will not provide or include any financial or investment advices. Special thanks to collaboration supporting organization under PASS for reviewing materials and also approve that they are suitable for ICT professionals. So before the start of the webinar, let me introduce the background of our association. HKEBA stands for Hong Kong E-Commerce Business Association, and we are a non-profit organization. Our mission is to upskill Hong Kong SMEs to catch up with the digital transformation trend. And also, we hope to nurture a world-class e-commerce community in Hong Kong. Our projects are funded by the Trade and Industry Department and also Vocational Training Council. At the same time, different associations, chambers of commerce, enterprises, and also e-commerce platforms are our partners, such as you can see on slide, WTIA, Asia Array, Hong Kong Management Association, Shopify, GoJoy Travel, etc. So at HKEBA, we have a wide range of offerings for our corporate members and individuals. We run local events regularly. You can see we run a lot of seminars. We want to share the latest and insightful information that related to the marketing, innovative technology, and also the e-commerce platform. We have held a lot of seminars in the past few months with corporates like Adobe, Ricardo, SAP, Google, Shopline, this kind of huge entity and also technology firm to share their insight on this kind of knowledge. We also provide an on-site tour and also regular networking dinner for our members. For the last few months, we brought our members to the airport authority and also the hospital authority to check out their latest technology applied in their daily operations. We also have regular networking dinners for our members. We hope to connect talents and also specialists and see if we can explore a potential opportunity for them to do business together or any business collaboration opportunities for our members. So before COVID, we also have brought our members to the overseas delegation tours to Taiwan, Thailand, and Vietnam. So we hopefully after the COVID, we can also start this project, the overseas delegation tour again. We also provide you with lots of useful tips and also articles, tips for setting up an e-commerce platform and the latest information about the industry innovation technology. We also have several industry professionals interviews and their experience sharing. We will also promote our partners event and their news promoting some iconic events within this industry. We hope every person in this industry can get to know each other and join this kind of meaningful events. So if you are looking for digital transformation opportunities for your business, feel free to contact our staff through the website, and we will get back to you very soon. At the same time, we also provide a series of training courses on business field related skills. You can see we provide our training scope covers from e-commerce, digital marketing, CRM, coding and development, marketing automation, data science, cybersecurity, and also cloud application. So if you are interested to upskill yourself on this kind of skills and knowledge, please you can reach out to us. So thank you for all the online audiences get to know about HKEBA. If you want to have more information about us, you can follow us by scanning the QR code on the share screen slide. You can follow our social media, Facebook, LinkedIn, or even subscribe to our monthly newsletter. If you have any inquiries, please feel free to drop a message, an email to info@hkeba.org. So we now have around 1 minute, so you can follow our social media and also subscribe our email and monthly newsletter. Once again, we want to emphasize the objective of today's webinar. We hope to share the latest digital transformation trends and implementation strategies to help equip professionals in the ICT industry in Hong Kong. We hope to empowering all the Hong Kong's ICT professionals through sharing this kind of information and enhance the standard and external competitiveness of Hong Kong ICT professionals by updating them on the latest trend and technologies, especially in artificial intelligence, extended reality, and also blockchain. So let's have a look at today's webinar rundown. For the part 1 workshop, we will have an introduction to the topics of DeFi, CeFi, open source blockchain technology. We will talk about the knowledge related to liquidity pool analytics and yield farming, some things about DeFi development and also how you can provide liquidity. And we'll have a short break, followed by will be the part 2 of the workshops. We'll discuss more about the Hong Kong blockchain landscape and regulations, some of the crypto platform in DeFi and CeFi, and what are their risks, about digital assets regulation and also effect on fiat on and off ramping. For the part 3 workshops, we'll learn about what is Flex USD and AMMs, some of the DeFi, CeFi product and applications, and also we will dive deeper on the liquidity pool analytics again. So followed by the part 3 workshops, we will finally have a summarize of how today's webinar's content beneficial to all our online audiences. And also please help us to fill in a feedback form. So in case you have any comments related to the webinar content and also the arrangement, please let us know. So your opinion will help us to improve the upcoming events arrangement and content. And if you have any questions, please, you can drop your questions during the webinar, but we will gather all the questions and answer it during the Q&A sections. Okay. So we actually expect you in this webinar to learn what are open source blockchain frameworks, the Hong Kong blockchain landscape and regulation, crypto platform in CeFi and DeFi and its risk, digital assets regulations and effects on fiat on and off ramping, cross-chain DeFi, application of this kind of technologies, what are the evolution of different frameworks and protocols, and the latest framework trends and their potential use case. And finally, will be some information about how to do a proper liquidity pool analytics and yield farm. Okay, let's introduce our guest today. So the first speaker will be Tommy, co-founder from APY Vision. The second speaker will be Louis Lee, co-founder of CoinUnited.io. And the final speaker will be Kenny, head of business development of Conflux. So Tommy is the co-founder of APY Vision. Tommy's vision is to deliver the best analytics for the liquidity providers, helping them to understand gains and losses accurately. Secondly, to provide the best research tools for liquidity pools so the providers can determine the best pools to provide the liquidity in. For Louis, he has worked in the blockchain spaces for over 8 years and is currently the co-founder of CoinUnited.io, the Asia's largest cryptocurrency platform. They establish and operate Asia's largest Bitcoin ATM network and provide over-the-counter exchange, investment in blockchain startups, and hosting cryptocurrency seminars. Louis is also the blockchain course tutor in FIFA Works, the host of radio show Blockchain and You. Moreover, Louis is one of the partners of the Red Soldier Limited, helping the company to develop business in the field of blockchain technology. For our first speaker, Kenny has been in blockchain since 2017, and he is now the head of business development of Conflux. Founded in 2019, Conflux is the home of crypto yield and is committed to provide institutional and retail investors an easily accessible platform. And Conflux create a different solution to bring investors and crypto markets together through yield products such as FlexUSD. You will learn more about it today. And also the world's first interest earning stablecoin and AMM plus functions. So let's move on to the part one workshops of today. So I will do a brief introduction first. So I think some of you have heard about this. Decentralized finance is an unbundling of traditional finance. This is said by Raphael Kosman. So almost every component of banking, lending, and trading is now managed through a centralized system run by regulatory organizations and gatekeepers. Consumers must interact with a slew of financial middlemen to obtain anything from loans and mortgage to stocks or even bond trading. So by disempowering the middleman and gatekeeper and empowering common people through peer-to-peer trades or DeFi, some will say whether DeFi is threatening the centralized financial system. So I'll give an example. Usually we earn a low percentage of interest on our funds by putting them as an online saving, and the bank will pocketing much more profit by lending our saving to other clients. But under the system of DeFi, the ecosystem of DeFi, that allow us to lend our fund directly to other buyers. So we can pocketing a full percentage of return on our investment or lendings, means that almost anyone can be a trader or a liquidity provider in the DeFi ecosystem. But doing yield farming with crypto, how does it work? And is it really attractive, as I said? The potential return come at a high risk in some person's perspective. with the protocols and coins earned subject to extreme volatile and rug pulls, where developers abandon the projects and make off with investor funds, we have to pay attention to some of the potential risks of doing yield farming or staking during with cryptocurrencies. Yeah, so let's invite Tommy to share deeper with us on the topics of yield farming. Let's welcome Tommy, co-founder of APY Vision. Tommy, please, you can now share screen and also open your camera and microphone. Thank you.
Hey, thanks, Tim. Thanks everybody for joining. Yeah, everyone, I'm pretty excited to be here. I'm excited to be talking about DeFi and what liquidity providing is. So how it's going to work is that I'll go over, again, what traditional finance is, and also give a little bit of examples of how everything works in traditional finance. And then what I'm going to do is I'm going to go over sort of how we got to DeFi. And then what we'll do is we'll dive right into the centralized exchanges and also how we can provide liquidity as an end user, where right now, if you were to do it in the centralized approach, it's not possible. So that's why I wanted to show you that, because we're actually opening the doors for things that are currently not available in the traditional finance world. So let's dive right into it. Most of you guys will know this, but the term finance, it's pretty broad. It describes a lot of different activities like banking, leveraging, mortgages, credits, capital markets, investments. So it's very broad, right? So what we can see is, examples include lending, borrowing, like I said, mortgages, and also currency trading, commodity trading, trading of bonds, etc. Now, what we see here is that traditional finance, you usually interact with an institution, right? So whether that's trading or opening a savings account, it's kind of a one-way street where the bank is taking care of all of the things behind the scenes, and this process is pretty opaque. Meaning, if you, like Tim was describing, if you deposit some money, you don't really know where it goes, right? And so that's actually a basis of the 2008 financial crisis, which was that people were selling mortgages, basically guaranteeing it's high quality, but in reality, it's actually junk mortgages. And so, at the end of the day, nobody knew what was good and what was not. And so the banks were able to essentially play on this and, sell things that aren't actually true. And this is not great because, the bank's taking other people's money and, doing whatever with it without your knowledge. The other problem too is they commonly take a commission for their services. And that commission can be, pretty low to pretty high, depending on what it is. And again, it's pretty opaque as to what the true cost of the commission is. So that's kind of traditional finance. And the idea with DeFi, decentralized finance, is that all of the code that is being executed, it all mimics traditional finance primitives. So primitives like borrowing, lending, for example, it's very similar to traditional finance, where you're borrowing from somebody, but instead of a bank, you're borrowing it from another person, for example. And also trading different commodities, different types of equities, for example. You can also do that as well with DeFi. And the smart contracts are essentially executed based on logic, and it's predetermined by different conditions that needs to exists before it executes. And then also too that the contracts can be verified by people before interacting with them. What's really cool is that oftentimes there's no middleman involved. It's just a smart contract that you're interacting with, and it's almost like a marketplace, right? Because the contract exists, but there needs to be two sides that that transact. So the smart contract is the glue that brings together the people and the buyers and sellers, for example. But it guarantees that it would execute based on certain conditions. So it's pretty programmable, which is pretty cool to see. And yeah, so this chart, we can see that, in the beginning of 2021, it was about 40 billion TVL, but now it's as of December, it's over 250 billion. And what TVL means is it means total value locked, which is essentially the sum of all the assets that have been deposited into decentralized finance smart contracts. So as you can see here, it's actually grown quite a bit. I actually started right around here, and I think at that point it was about $500 million total lock value. So it's grown quite a bit since since I've been in the space. So that's kind of DeFi in a nutshell. But you guys might be wondering, why now? Why DeFi and why 2021? Why was it this year that it took off? Why wasn't it 5 years ago? Because Bitcoin existed, blockchain existed 5 years ago. And I want to take you guys back on a little bit of a history tour. Back in 2009, after the financial crisis, Bitcoin was created by a person named Satoshi. And he saw that, there was a lot of mistrust in the banks, and, not being able to verify things was one of the problems with, traditional finance. People can't verify that transactions existed unless they go to a bank, but the bank can also, obfuscate a lot of that. So Bitcoin was revolutionary because it introduced the concept of a distributed ledger. Now, Bitcoin is actually not that smart. It's just really meant for transferring the asset Bitcoin from one history in the distributed ledger. So it's not really that exciting. What was really exciting was in 2015, Ethereum came along and it said, okay, we really like the concept of the distributed ledger, but are we able to make it so that we can actually program logic into the blockchain? And so it allows for execution of code via smart contracts. And back in 2015, it was very, it was kind of like a research, right? It wasn't really proven, but it did launch, and that actually drove the ICO boom, because what happened was Ethereum was able to create smart contracts, which are actually tokens that it creates, and people were able to essentially have initial coin offerings, which are structured as smart contracts. So basically, all of the ICOs were essentially being run on Ethereum because of the smart contract platform. And as we know, 2017 to roughly early 2019, we saw a bear market, meaning the price and the market of all the cryptocurrencies went down a lot. The reason for that is there was too much expectations. At 2017, the ecosystem of the smart contracts was just beginning to, basically build up, and there weren't that many frameworks in place, or that were able to kind of help developers code smart contracts. There were no primitives in place. There weren't any sort of infrastructure essentially that enabled people to be able to build and write code effectively. And there were a lot of learnings along the way. And so what happened from 2019 to 2020 was a period where people actually built out a lot of the base frameworks. People built out a lot of the plumbing that needs to be in place for the code. And so that was really a time of essentially people hands down coding and innovating on the smart contract aspect of things. And so into 2020, summer 2020, that's when we saw a lot of the innovations that come up, and that was happening, starting with Uniswap, for example, who created the first decentralized exchange. Also with along with Bancor, they've added a lot of the base layer to a lot of these smart contracts that enable people to build on top of. And starting this year, we saw influx of all the developer, of the talent, and along with that came capital. But a lot of that came also a lot of speculation, and so that's why we're seeing a lot of hype around this, just because people have been building on it, and it is quite an innovative thing that a lot of these projects are working on at the moment. So behind all the speculation, there is actually a lot of innovation that's happening. Some of you may know this, some of you might not, but I want to touch a little bit on this because there's about 6,000 or 7,000 different cryptocurrencies, and not all cryptocurrencies have smart contracts built in, right? So for example, Bitcoin, right? Bitcoin is the most, the highest market cap crypto. It is only meant to be transferred from one to another, right? It doesn't really have any other capabilities. Same thing with Dogecoin at the moment. It doesn't, you cannot program with it. It's just, transfer of value and the store of value, for example. Same can be said with Ripple and Stellar, although they are trying to, add some more smart capabilities. But the idea is that, I would call them, more of a store of value tokens. But if you contrast that to the projects here on the right, Ethereum kickstarted the smart contract type of paradigm, and then all these other chains or projects follow suit. So we have Polygon, right? Polygon's this one. We also have Polkadot, which is this one, and we have Avalanche and Solana and Finance Smart Chain. And so all these blockchains on the right here, they all enable smart contracts, which enables decentralized finance apps to be built on top of it. So I just want to make that distinction clear because some people might not know why some tokens are the way it is, but I would say a lot of the activity currently revolves around chains that have smart contract capabilities. And so, yeah, keep an eye out for a lot of these tokens. How the tokens usually work is when you need to transact on the blockchain, you need the token in order to pay for the transaction. And so most of the time, you would need the base token, which, if you're on Ethereum, you would need Ether to transact. Same thing for Polygon. If you need to basically interact with smart contracts and decentralized apps, you also need some amount of Matic with Polygon as well. And the next thing I want to talk about is, a lot of people ask me, what are the differences between traditional apps and decentralized apps, also known as DApps. So what we can see here is that traditional apps, most of the time, if you have data, you would need a database, right? You would also need your own web servers, backend servers. The code is not open source most of the time. So businesses, for example, Google, obviously they don't want to make their code open source because people can then copy it and obviously take away from their market share. Same thing with their data. So their secret sauce, obviously, they don't want to disclose that. And obviously trade secrets are very, kept in a private manner. They do expose APIs, which are data integrations, but the data itself is not open to anyone to view. Contrast that to decentralized apps, also known as DApps. It doesn't need a database because the code actually lives on the blockchain. It doesn't require a server because, again, the miners are actually the ones running the software that essentially is being used by other people. The code most of the time can be viewed online, so it's all open source. People can verify the code does in fact do what it's supposed to do, and also all the data that is basically being used or being stored is lives on the blockchain. So any developer can read from the blockchain and get a sense of what happened, and that's really cool because now it's this open approach where essentially people can build on top of what other people has built, and they can actually do that quite easily because like I said, the code is open source, and you can actually build on top of each other. So that's what we call DeFi Lego blocks, because a lot of different apps, they either are a fork, meaning apps that are basically taking the source code and then modifying it a little bit and then deploying that app as their own, or they are using those base apps to build more complicated logic on top of. So this opens a new door to sort of how we think about software development and also how we deploy applications. What's really cool is any developer can deploy smart contracts to the blockchain. Basically, as long as you have a way to deploy smart contracts for other people to use. So that's pretty cool to me because I'm a developer, and to be able to run to be able to build any app and have it deployed on the blockchain and other people using it, that's pretty revolutionary because you don't even need a server, right? And so yeah, the code that you deploy is following a predetermined set of logic. Anyone can essentially review and look at, and when you open source or when you upload that code, yeah, applications can embed logic for when funds should be and can be transferred. So yeah, there's basically it's programmable money, which has never been done in the history of mankind before. So that's really exciting to me because you can do all kinds of new paradigm shifts that essentially wasn't enabled before. Yeah, the other thing I wanted to say was it's kind of a double-edged sword because developers can deploy smart contracts, but they don't need to be verified, right? So any developer technically can create a program, and what you can see is that there's actually a lot of anonymous developers who essentially write the code, but they're not public, right? And so what you can imagine is people then try to create an app, and they are malicious about it, and they embed some logic that will steal users' funds when it gets to a certain point. And so you got to be very careful, because the idea that anyone can write code and write programs and you interact with it means that there's going to be some risk involved if you don't know or trust who you're dealing with, or the code that you deal with isn't that trust worthy. So it acts kind of like a double-edged sword. So just kind of be aware of that. Okay, and when you talk about DeFi, like I said, even in finance, there's different things that consist of finance. It's no different in the DeFi landscape, right? There's different, essentially, products that are out there. So, for example, you have decentralized exchanges. That's what we'll be focusing on for today's talk. And essentially, a decentralized exchange is basically a set of smart contracts that allow users to exchange tokens from other users. And it's basically done with smart contracts without any third party that needs to approve things. It's all kind of permissionless and decentralized. People swap different tokens using it. There's also the concept of staking. So staking is a way where contracts allow users to lock up assets in exchange for a yield, right? A common type of staking right now that is in DeFi is Ethereum staking. So if you stake Ether, when ETH 2.0 comes out, then you would get a like a yield, right? Essentially on a high level. So that's been very popular because people hold assets, and they don't really they don't have to do anything to essentially earn a yield, kind of like a savings account, right? The third one that's kind of up and coming is the idea of options and derivatives. So trading options with calls and puts, like traditional finance. There's apps out there that you can buy and sell options. So you can actually take one side or take the other side, almost like a marketplace for options. Same thing with derivatives. There's apps out there that will let you leverage, for example. So yeah, there's a lot of that in DeFi, sort of like the third bucket. A smaller bucket right now is insurance. So being able to protect against hacks. There are some insurance products out there that is, again, smart contracts, but there is some level of human sort of interactivity for insurance, just to ensure that people aren't claiming things that aren't true, for example. But the base contract, the main contracts are actually written, and people can interact with it, sort of in a, again, permissionless manner. The last one, I put it last because it's one of the bigger ones. It's actually lending and borrowing. So this is where people have extra tokens that they can essentially put in the platform, and then when somebody borrows those tokens, they would earn essentially a yield for that, a rate from that. Very much like traditional type of setup, but in this case, you're lending and borrowing most of the time from other people's assets. And so it's almost, again, like a marketplace for lending and borrowing. So again, you can take either side. So you can take the lender side, or you can take the borrower side, depending on particular use case. Yeah, so that's kind of like what the DeFi landscape is right now. In the next year, it'll probably change a little bit. What we're seeing is there's going to be a lot of cross-chain stuff that happens. Talking from one chain to another is an issue at the moment because there's many different chains that work kind of in silos. So we'll see more of that, and as we get more innovation, I think we'll get a little bit more different products coming out from DeFi. So if you guys remember from the chart, it really started last summer. So we call that DeFi summer, summer of 2020. And so I think the innovation will just continue to come out at a rapid pace. So the slide will probably change next year if I give a talk around this time next year, just because there's going to be so many different things that come up. Okay, so I want to hone in a little bit more on the first point, or the first tenets that I was describing of DeFi, which is decentralized exchanges, right? Decentralized exchanges play a very key role because an exchange allows trader to swap between tokens, and an exchange also allows people essentially to take either side, so either the trader side or the liquidity provider side. What's really cool is that in traditional finance, you can be the trader, but you cannot be the market maker, because market maker in traditional finance are large firms that have millions, billions of capital, of liquidity to provide the exchanges with, and it just doesn't exist. This concept of being a retail market maker, that's something that hasn't been done before, but it is enabled with smart contracts and decentralized exchanges. Yeah, and essentially how it works is the smart contract is the glue to ensuring that the liquidity providers are being paid on every swap, and that the traders have a fair price that they can swap with, or fair exchange rate. And the idea is that as a liquidity provider, you have to send tokens to the smart contracts, which essentially will at that point allow traders to swap in between the tokens. And usually what happens is you would provide 2 tokens, although that can actually be up to 8. So usually anywhere from 2 tokens to 8 tokens is what you would provide as a liquidity provider, and then you send it to the exchange. And the smart contracts ensure that on every swap, the liquidity providers get a commission, and that commission is split between all of the providers based on how much they put in. So it's essentially makes it fair, so that if you provide more liquidity, that you'll get more in fees earned, right? So smart contracts enable that, and people can actually verify that that's the case by actually reading the code, right? Yeah, so this is pretty exciting to me because personally, I feel that this will open the door to a new breed of investors, because now, we have a new side that actually is more of a passive, if you look at it, more of a passive investor, because they're not like this side where they're always, trading and swapping depending on market sort of conditions. Whereas a liquidity provider, you would just provide liquidity once, and then you just let that let the fees accumulate over time. And it's very different than traditional finance because it doesn't exist, right? And so yeah, liquidity providing, just a little bit more of a going into the mechanics a little bit. How it works is liquidity providers deposit the tokens, usually from 2 to 8, like I said, but also sometimes you can deposit just one token. It really depends on the app, but essentially you deposit tokens, and whenever there's a trade that happens in your pool that you deposit into, then you would earn a trading fee from that, essentially a commission for every time somebody swaps. And that commission can be 0.01%, which is pretty low, all the way to 1 to 2 to 3%. So it depends on the pool, depends on the characteristics of the pool, how it's configured, for example. Yeah, and so it can be quite lucrative as a liquidity provider because, as you guys will see later in the slide, in 2021, there's been $1 trillion of exchange, basically of US dollars worth of exchange that happened in decentralized exchanges. And by the way, decentralized exchanges are also known as DEXs. So DEX is what we call a decentralized exchange. It's also sometimes referred to as an AMM, which is a automated market maker. So essentially a way for people to swap tokens without an order book. Yeah, and one thing to note is that there can be thousands of pools for a given exchange because again, it depends on the app, but most of the time you only have a pool that has 2 tokens. So if you want to trade, for example, I'll take an example of Bitcoin to Ethereum, you would actually have to have a pool that has Bitcoin to Ethereum or Bitcoin to a third token that goes to Ethereum. So yeah, essentially decentralized exchange, think of it as a set of liquidity pools that have 2 or more tokens in it. And for a trader to swap from one token to another, the pool needs to have a route that goes from one token to the other. And this is all, again, governed by smart contracts as to how the route works. And people build essentially apps on top of this to ensure that people have the best rates. And so, yeah, essentially people build on top of it to surface up the best rates. But fundamentally, usually what happens in the decentralized exchange is that there are thousands of liquidity pools, and each liquidity pool is a set of tokens inside it. And so depending on where you put your tokens in the pool, that'll dictate your performance. And so as a liquidity provider, it's actually not that easy because there's a lot of different factors in play. The volume, the reserves, the historical trading patterns of the pool, those all need to be taken into account when you are providing liquidity. Yeah, and only when a trader interacts with a liquidity pool will the liquidity provider collect fees. So that's important to note as well, because if you provide liquidity for a pool that doesn't have any trading volume, then you won't collect any fees. So something to think about. Yeah, so just to give everyone some perspective, like I was saying before, the as of December, there's about $250 billion locked in DeFi apps and protocols. 30 to 40% of all the TVL is actually locked in liquidity providing from liquidity providers. And then there's essentially over $1 trillion worth of volume on the centralized exchanges in 2021. And so you can see, if the trading fee was 1%, then that's still a very, very big number. So yeah, just to give everyone perspective, liquidity providing is one of the top sort of DeFi activities, and AMMs, is sort of the most used DeFi protocols. So yeah, it's a pretty big deal. So okay, and now market making is accessible to anybody. And some of you may know some of these logos, but they're all decentralized exchanges. So Uniswap is the de facto one of the original decentralized exchanges. But then we also have SushiSwap and Curve as well, and then QuickSwap is another exchange from another network. But there are probably hundreds of different decentralized exchanges, and some have more trading volume than others. So as a liquidity provider, you have to sort of see where to best place your funds, right? So it's not easy because there's, I think, 12,000 different pools at the moment, and depending on what you put in, your returns can be very, very different. Tim, I'm not sure if we have any questions from the audience, but perhaps I can just stop here and maybe field any questions that anyone has.
Let me check on the question first.
Okay.
Okay, Tommy. I think so far, no question yet from the audience. So what about just keep presenting, and I think when that we do the Q&A later on. I think just keep the room
Perfect.
down. Yeah.
Okay, great. So that's a nutshell as to what decentralized exchanges are and what liquidity providing is. I do want to turn you guys' attention to another term that you might have heard recently, or maybe not so recently, in the last year and a half or so, and that's yield farming, aka liquidity mining, because it attracted a lot of attention due to the fact that people can actually earn such a amazing yield. For example, this one advertises 980%. I mean, who doesn't want 980% yield, right? Or this guy, 2,300%, 2,800%, right? Come on, like that's just amazing, right? But I want to kind of, before I delve into this and talk about the risk and sort of how this mechanism works, I want to go back in time and tell you guys how liquidity mining came about, because some of you might not know this, but back in 2020, back in 2020, when a full bear market, nobody wanted to touch crypto, right? Nobody thought that everyone just basically wrote crypto off, right? And so it was very hard for projects to say, well, we have this really cool idea, but we want users, right? We want people to use more marketplace, for example, to trade or to borrow and lend. Most of these are marketplaces, right? Without one or the other, it doesn't function properly. And so it was actually liquidity mining and yield farming was a playbook right? A playbook by early DeFi projects. And the idea was, you know, it's a new product. You're depositing funds into the app and the protocol. There's a tremendous amount of risk, right? Because these are not projects that, you know, were well known. They were essentially, you know, written, not really battle tested. And so there's a lot of risk, right? But to get the early users, what these platforms have done was basically incentivize them to use their platform and help grow the platform. And in return, what happens is these protocols will reward the users um, by um, by their own crypto tokens. So if I'm a project, I most likely have my own token, and if you interact with it or lock up your tokens in it, then in exchange we will give you the rewards, right, of the project's token. And so that's basically what it is. When somebody says yield farming, it's a way for essentially projects to give away their tokens for getting for using the service. And so yeah, what you can see here is that, you know, all these projects are essentially giving away their token, and they're promising the APY is that much. But the problem most of the time is that if you're giving that much in your API, people are just going to sell those tokens, right? And what ends up happening is there's just too much supply because, you know, these protocols keep minting or keep printing their own tokens, and what ends up happening is it gets flooded right onto the market in these centralized exchanges, and the price of that token goes down. So your APY goes down, and in order for the protocol to keep advertising a high APY, they keep printing more tokens, right? And so that kind of gets into a very bad state where, you know, a lot of these projects essentially are, you know, printing tokens and, you know, making them valueless, right? That's not always the case, but, you know, it's kind of that's something to be mindful of whenever you are, you know, looking at these high APYs, because, you know, um, a lot of times it's basically people minting tokens of their own project. Yeah, just talking a little bit more about the mechanics of yield farming. Usually, to qualify the rewards, you either need to buy the protocol token and then provide liquidity on the exchange. So not only do you have to buy the token, you also have to pair it with another token, most likely ETH or most likely stablecoin, and provide liquidity on the decentralized exchange. So you're basically helping them with liquidity in exchange for a share of the reward token, right? And so you can see it's actually a double whammy here, because you have to buy the token, but then you also have to provide liquidity. And if that token goes down, for example, you get more of that token in your pool. So basically, you're getting a lot more valueless token if the price of that token drops, right? And I've had this happen to me. I'm hoping it hasn't happened to the audience, but it's not. It's not inconceivable to see an investment plunge in value because you bought into the protocol's token, and then that protocol token goes down because they're just printing so much of it that people just continue to sell into the exchange. So currency risk is definitely a consideration when providing liquidity for that token to get the rewards. And so, yeah, the other problem that, now that we're talking about issues and risks, is that not only do you have to worry about that token being devalued from this excessive minting, but some protocols will promise high APYs, but they're actually kind of what we call honeypots, which are essentially making you deposit your tokens into the smart contract, and then either advertently or inadvertently suffer a hack. And then what happens in that case, because you sent the tokens to the smart contract, you don't actually have custody of it anymore. And yeah, and they essentially take your funds from the contracts, and basically you're left with nothing, right? So that's another common, I wouldn't say too common, but it's definitely common to see that, you know, people advertise a high yield for a farm or for a product, and then a hack happens to it. And yeah, or even worse, you know, they deliberately take the money, and because like I was mentioning earlier, you don't need to verify yourself in order to deploy apps and contracts. People would just run off with other people's money, right? So something to really think about, and really do your research when it comes to yield farming and liquidity mining. So yeah, just, you know, some word of caution there, because I've had this happen to me many times, unfortunately. I would say out of 10 investments that I've done, probably 2 of them will you have to expect just total loss, because that's just sort of how it works. But you know, you sort of make it back with the other 8 investments. So yeah, just something to really think about. It is getting better, I feel like, but definitely I wouldn't say that it's zero. Yeah, definitely getting better, but at the same time, you just never know, right? So you always do your own research. Ideally, you want to know who created the product, but then again, there's a lot of anonymous developers out there. So yeah, just have to be be careful on that front. Yeah, so I've talked about sort of DeFi. I talked about decentralized exchanges as part of DeFi, and I've talked about liquidity providing on decentralized exchanges, and then I also talked about yield farming. But a lot of times people don't really have an idea, because there's just so much out there right now. There's so many different pools that you can invest in. There's so many different farms that you can invest in. It's really hard for somebody to really sort of understand and gauge what the yields and the returns are like. And so that's really the core of what we do at APY Vision. I'm gonna kind of switch on the shameless plug here, because you know, this is what we do, and I do want to talk about our product a little bit. But our mission really is to help liquidity providers across the DeFi space to make confident investment decisions. What that means is, you know, a lot of times these protocols, when you deposit your tokens, they don't tell you how much you deposited, the US dollar value, for example, or they don't tell you where the initial tokens you deposited, because they don't really want you to know, because, you know, a lot of times you end up actually not making money, and, you know, from their perspective, they just want to, you know, get as much liquidity as possible, get as much tokens locked as possible. So our vision really is to build a world-class analytics tool suite that caters to liquidity providers and people who are looking to earn a yield in DeFi. And so we have 2 types of, I would say, tracking. The first one is tracking on an individual level, meaning if you are providing liquidity, we show you exactly how much you have gained or lost as a result of that. So for example, when you provide liquidity, you provide it with 2 or more tokens most of the time. In this case, this person did provide 2 tokens, One is USDC, which is a stable coin, and this other one called Krill. And what we show is all of the initial tokens that the user has deposited. So in this case, it's this number and 193 USDC. But over time, because you're providing to an exchange, you are actually subject to the currency risk based on market forces. So in this case, or the person actually lost some USDC relative to what they started with, and they got more of this other token. And so that's essentially what an exchange does. It essentially will shifts your token allocations based on market demand and supply. And so you can see here, the net result is actually a negative gain, right? So we provide that the analytics to our users just so that they can see what's going on with their investment. And also, if there's any farming opportunities that the user is engaged in, they can actually see what the impact of that is. And we sort of sum everything up so that they can have a coherent view of how they're doing from their investment. So that's sort of the first part. The second part of the app is if you want to drill into the specifics a little bit more, we can actually show that for you, where we track all of the tokens you entered with and all of the tokens you have now, and we make a comparison as to what the changes have looked like, and also the price changes as well. So there's a lot of different factors that change, and we try to show all of that in one coherent view for our users. Yeah, so our users find it quite helpful to be able to break it down because it is quite new, and depending on market forces, you can actually, you can actually lose funds if you're not careful about it. The other part of the app that we have is actually to surface up opportunities. So we don't give financial advice, but what we show is all of the historical fees that were collected as a result of trading from the users. And so we surface that up so that you can do a research as to what pool you think will perform well over time. And we surface up all the pool data and all the historical data that people would want in order to make a decision as to whether or not to provide liquidity. Yeah, and so a couple more features as to whether or not the pool is increasing from fees collected perspective, and also the APY from essentially being in the pool. Yeah, so if you guys are thinking about yield farming, or you guys have started yield farming and liquidity providing, please do check us out. It's just apy.vision. So, but yeah, that's the presentation that I have for you guys.
Thank you, Tommy.
Yeah, hope that was helpful.
Yeah, thank you. Yeah, I think it's quite a inspirational presentation from Tommy to our online audiences. So we'll now have entered the Q&A sections. So if you have any questions, especially related to yield farming or liquidity providing, you can ask our expert today. So I have one question on hand I would like to ask. So what are the risks when providing liquidity? As I know, the crypto market is quite volatile, especially for different cryptocurrencies. So what are some of the other risks when providing liquidity if I wish to do the SLP?
Yeah, definitely. I think the first thing to think about is when you provide liquidity, you need some tokens, right? Sometimes you have those tokens, but a lot of times you need to actually trade those tokens first in order for you to provide liquidity. And so part of the risk is actually just the currency risk, right? Where you provide liquidity at a price ratio. So let's say Ethereum is $4,000 today, and if I want to go into the Ethereum pool, I need most of the time I need $4,000 worth of Ethereum, and then $4,000 worth of USDC or a stable coin. But the problem is, due to the fact that how the smart contract works, if the price ratio changes depending on when you start it to when you exit it, then there will be some currency essentially penalty. So let's say it's now $3,000 for Ethereum. That changed from the time you entered, which is at $4,000. So there will be some amount of penalty that essentially the smart contract will incur for you. So yeah, I would say currency risk is a big one, and yeah, definitely it would eat into sort of your profit and loss if the price changes too much.
Any case on hand that because I heard you mention about the scamming, the risk of scamming by maybe some bot, or so if do you have any case on hand like you can illustrate to us or to our own audiences? I think this is not a very common problem we may encounter for us.
Yeah, so usually what happens is there's a couple of risk factors. When you deposit your token into a decentralized exchange, if that exchange gets hacked, for example, and all the smart contract is drained, then you would essentially lose your tokens, right? So that's kind of like the first attack vector. The second attack vector comes when you provide liquidity. What you actually get is something back in your wallet. It's what we call an LP token. An LP token actually is another token that represents your share of the liquidity pool. And so what happens in yield farming is you actually have to send that token that you get back from the exchange to another contract to farm, or essentially to lock up your this LP token. Because without this LP token, you cannot access the liquidity pool token that you entered with. And so another attack vector is someone actually running off with those LP tokens that represents your share of the pool, and then they would redeem the LP tokens afterwards to get the underlying tokens. So that's another risk factor when you send your tokens to a farm.
So oh wow, a lot of questions here. Q&A. Okay, so I will pick some interesting question, or I think it's quite insightful for our audiences. Okay, so what risks are there when using Curve Finance? Can you answer it?
Yeah, so Curve was one of the AMMs or decentralized exchanges that I presented as a logo. Curve has actually been around for a while. They're more or less one of the original exchanges. They started with essentially supporting stablecoin pools, so pools that don't fluctuate too much. But then now they since moved on to more traditional type of pools where anyone can provide any type of tokens. I would say that they've been around for a while, so the risk is actually a little bit lower, but you're still subject to currency risk, right? Because if you provide Bitcoin or Ethereum, for example, and that price changes from the time you entered and exited, there's still a currency risk on that front, right? So I would say the smart contract risk is lower, but with any AMM, there's going to be some currency risk.
So would it be like lower risk for the stablecoin pools? right? Or are there
Yeah,
still any potential risks out there in the stablecoin?
definitely. Stablecoin pools are lower risk, right? Because the price doesn't change too often between a stablecoin to another stablecoin, and so your currency risk is actually quite low. And so that's why it's so popular. But the problem also too is because it's so popular, a lot of people actually are in those pools, which means that your yield is is a bit lower than other other pools, for example.
So high return, high risk.
Yeah,
Um,
exactly.
okay. So any other competitors is there for like the liquidity pool analytics from our audience?
Yeah, so for sure. So I would say that we provide a lot of the historical data, but there are products out there that keeps track of the your wallet balances, for example, and all your sort of yeah different different diff- different protocols that they keep track of, in addition to liquidity pools. So, for example, lending and borrowing, they also show you what your current position is. Whereas we are very focused on liquidity pool analytics, and that's by design. So
Okay. I think it's a quite interesting question. How do you assess which yield farming projects are legit?
yeah, that's a great question. Yeah, so different people have different assessments of risk. Some people won't invest in developers that are anonymous, so like they don't know who founded the project. Some people essentially look at the code first. They audit the code. Some people rely on different services. There's one called RugDoc, which is a service that essentially reviews the different protocols and farming opportunities. So some people use that, but again, nothing's really guaranteed, which is why it's kind of a high risk, high reward type of situation here.
Okay. Okay. Yeah. How do you like Uniswap and SushiSwap? Can you compare these two like platforms?
Yeah, so right off the bat,
You can
sushi
also
swap.
compare with a APY vision.
Yeah, for sure. So um, it depends, right? But right off the bat, if you are comparing, apples to apples, as a liquidity provider, I'm getting 0.3% on Uniswap, one of their version 2 products, but I'm only getting 0.25% on Sushi Swap. So on the same volume in the pool, you're going to get a little bit less on Sushi Swap. But they do provide farming opportunities that perhaps could make up for it. It just kind of depends. So yeah, you have to do your research, and it really depends on which pool you're providing liquidity with.
That's a very long question here. Okay, as a retail liquidity provider, so how hands-on does one need to be after initially entering a liquidity pool? So is it possible to set and forget and just let the exchange run with whatever set amount? Or would intrinsic market force eventually drain the bank?
Yeah, that's a good question. So it really depends on the tokens that you're providing liquidity with, right? Because what ends up happening is if it's a less known project, um, the price could go down, which means that you end up with more of that worthless token in your pool. So I would say you would probably should look, pretty frequently. Well, not every day, but maybe, once a week to check on the performance. But most people, if they're in a more common pool, like for example, Ethereum, Bitcoin pool, they're okay with either getting more Ethereum or getting more Bitcoin, right? So if you get more Ethereum, you get less Bitcoin at the end, and vice versa. If the price of Bitcoin goes up, then you get less Bitcoin in your pool and more Ethereum. But if you're okay with both of those, then yeah, you could just, just not really care about it and come back in a few years and see what happens. So usually people do that if they want to kind of do like a set and forget approach.
It's a quite complicated question. So what's your opinion, or do you think like decentralized exchange will overtake decentralized exchange one day?
Yeah,
Is it
that's
possible?
well, okay,
Is it
so here's the
realistic?
thing. Yeah. As a like if we're comparing apples to apples, decentralized exchange fees are actually quite high, right? So on Uniswap version 2, for example, is 0.3%. Whereas, if you're trading on Binance, it's, depending on how much you trade, it's, way, way less than that. So there's actually, some merit in, going on centralized exchanges. But again, it's kind of custodial, and some people don't like that because you have to trust that Binance will not lose your coins, for example, or that they'll give you your coins if you ask for a withdrawal. So some people don't like that centralized aspect of it, but there is a high cost to trading on decentralized exchanges.
Let me pick some questions. Okay, if I am a developer, how can I get started in DeFi?
Yeah, that's a
Or
good
if I am
question.
a
So
totally from different other industry, like what skills or like concepts I have to?
yeah, so I would say the very first kind of exercise that you would need is to get essentially what we call a Web3 wallet, which is a lot of times people use MetaMask, but essentially it's kind of a gateway to these decentralized apps where you would interact with your wallet on the website with these apps. So that would be my recommendation, is to just try it out, like not really expecting any profits or anything like that, but really just to try out swapping, try out providing liquidity, try out a bit of yield farming. What's happening is Ethereum is the most used chain. Well, sorry, I shouldn't say that. Ethereum is a chain that is very popular, but the problem is it's a very slow blockchain. So people are willing to pay a lot for transactions. So transactions are probably anywhere from $30 to $100 each time. And so I would probably recommend people to start on a cheaper chain like Polygon, which is 1 to 2 cents for a transaction, which is a little more palatable. But I would, yeah, definitely look at maybe getting a wallet, depositing some funds into it. We actually have a bunch of tutorials on APY Vision, just to guide people through how to do it. If you guys are interested, I can send that link after.
Yeah. I think you can like send out some of the materials or links that like for referencing for our audiences, so we can like just post it in the chat box here.
Yeah.
Okay. Let me take a look first. Okay, this question is very common, I think. Is staking same as yield farming?
Okay, yeah, that is a common question.
Yeah.
So think of it this way, whereas when you stake, most of the time the reason you're staking is because you're earning a yield, right? There's no reason why you would stake otherwise most of the time, right? So in that regard, it's the same concept, right? Where you're staking or locking in some tokens in exchange for a yield, right? But a lot of times with yield farming, you're not staking just one token. You're not just staking ETH, for example. You're staking a liquidity pool token, which is the receipt that you get from being in the liquidity pool. And so that actually is more risk, because that liquidity pool token, you probably need to buy it first, because you have to buy 50% of one of the tokens, and then provide 50% liquidity to another token. And so you actually end up with more risk because you're buying the token and then you're sending that share token away. So yeah, in essence, it's kind of the same thing, which is you're locking in your token in exchange for some amount of yield.
Tommy's answer your question here, this audience. Okay. Okay, that means. Okay, this question is worth to answer, Tommy. So other than finance that crypto has been influencing, so do you think there's other industry you think would be the next? Can be
Yeah,
like better
definitely.
adoption
So
of this crypto.
yeah, I think the most common use case right now is like trying to make money, obviously, and DeFi and yield farming, that plays a big part of it. But I think what we see is as the space matures a bit and as innovation continues to happen, we'll see really interesting things coming out of the sort of how decentralized the way decentralized development is happening. So like I was mentioning earlier, people have access to data. It's not siloed. It's not, inside a company where nobody can access. That actually opens the door up for a lot of really cool use cases that can happen. So yeah, I would say there's in 2022 we're going to be seeing a lot more of the sort of how decentralized organizations work, and also new and exciting use cases that is coming out from smart contracts.
Yeah, I think it's also important for the public or mass to adopt this technology. I think now it's quite niche. I think it's kind of still niche in the market.
Yeah, definitely pretty niche.
Okay. So now that DeFi is so popular, have this yield decrease? What is upcoming maybe that OG DeFi people are getting into, like you OG DeFi people?
Yeah, I mean, my appetite for risk actually decreased quite a bit just because it's so hard to. The problem is trying to figure out whether or not projects are legitimate. That's kind of a full-time job in of itself. Obviously you don't want to lose. You don't want to lose your token. So I would say there's still probably good yields because obviously there's a lot of projects that keep popping up. But yeah, it's really trying to do your research. And also, within a chain, there's many different projects, right? So now there's 20 different chains, and each chain has their own protocol, or each chain has developers writing apps and protocols. So it's really trying to, doing your research to see what fits with your thesis, essentially.
Keeping yourself like updated to the trend.
Yeah, exactly.
Okay, not asking for financial advice. Okay, so what is the general sentiment of the market? Where are you putting your time and money in? Okay, not asking for financial advice and investment advice. Just
okay, so there's two ways of looking at it, right? There's looking at it from an innovation perspective. I see really cool things coming from that end, but there's also the other side of it, which is established players don't want to see this being successful, right? So I see possibly some regulation coming in. I see, people trying to essentially, preserve the state of current things. But I also see a lot of really cool things that are coming from an innovation perspective. So, not giving financial advice, but I think I think the market's mixed. It's really hard to read. So yeah, where am I putting my time and money in? Obviously, really getting historical data from the blockchain is what I'm focusing on. Not so much, yield farming opportunities anymore, but really understand the historical and surfacing the historical information for our users. That's what I'm working on.
And there's few questions still outstanding here. Okay, what's your top pick for smart contract blockchains and why? Like, what are the factors you will look at or dive into?
Yeah, so this is a great question. What ends up happening usually is the reason why Ethereum is pretty slow at the moment is because it's actually very decentralized. No one miner controls the network. So it's very hard to shut down. But the problem with that is it's actually quite slow because it's, everyone needs to be in sync. So people have tried to really fix that problem, the speed and the throughput. A lot of times they just, to fix it, they just have a certain number of computers or miners running, and it's permission, meaning you can't just run a miner and essentially participate. So it's very kind of a closed system, but those networks can actually it can achieve such a quite high throughput because there's not that many nodes talking to each other essentially. So you sacrifice decentralization for speed. So there's no right or wrong answer, I don't think, but I would say if you are, if you're thinking about censorship resistance, then I would look at more of a decentralized type of blockchains like Ethereum, for example. But if you care about speed, for example, then you would probably look at other chains as well, other chains instead. So yeah, it really kind of depends on your thesis as to what you think blockchain should be.
Okay, so we talk about a lot about blockchain. So how are you feeling about the metaverse trend?
Yeah, so it's very hyped, I think. The promise is there.
NFT?
I own some NFTs, just for fun, not really to make profits or anything. But I feel that the technology is not quite ready yet. So the Decentraland, for example, I've used their I tried to play it. It's just not a great experience. And Sandbox is just getting started. So I think I think we need some time to let that innovate a bit. But there is a lot of hype right now, obviously. I think there's more speculation and hype than there is actual innovation at the moment.
Okay, so what about we enter the networking sections? Yeah, I actually saw some questions still outstanding, but I think you can also ask in the networking sections if you are still interested about, okay? So I will now enable the chat room functions to any online audiences in this webinar room. So Tommy, if you would like see any audience want to conversate with you in the chat, you can just answer whenever you see any questions or comments.
Yeah, sure. Yeah. All right, so yeah, any projects that's making me excited. So yeah, definitely. I think so as I was mentioning before, there's a lot of different blockchains and they don't really talk to each other. So I think cross-chain swaps, so swapping from one token on one chain to another token on another chain, that's gonna be pretty cool. And also bridging from one chain to another, so sending one token from one network to another, that will be something that I think would be very important. Yeah, and then on-chain analysis for altcoins. So yeah, obviously APY vision, but for liquidity pools. But then there's Nansen for Nansen AI for kind of surfacing up on-chain insights, following users and trying to track what they're doing. There's also, like, if you're talking about tracking sort of like your altcoin portfolio and stuff, there's DBank and there's Zapper as well. So those are pretty good good projects or services to look at. Cross-chain projects. So yeah, there's a few bridges. There's Altbridge, there's Hop protocol, there's Synapse protocol. So those are pretty popular bridges. Is it possible to get these browsers? Yes, I can make sure to send a note to Tim.
Yeah, I think Tommy can, like, at the end of before the end of presentation, you can, like, just send out the materials or links you want our audience to study, or maybe have a reading on it. You can just send it.
Yeah. Okay. And is it possible that the physical art and the digital NFT remain synced or connected? Yeah, that's a great question. I think it's bridging from physical to digital is a bit hard at this point. Not very many people are doing it. Yeah, it's not an easy problem, because then people need to establish that link. There's a few projects that are trying to do it. So yeah. How to set up and build an automated maker. I guess the question is how to create a D app, how to create a automated decentralized exchange, or how to create like a pool within an automated exchange.
Yeah, I think maybe create a pool with an automated exchange. I think what hints.
Okay. Yeah, so if you create a pool, there's usually not there's no infrastructure matters that need to be done, because you're just creating essentially a contract within their app. Yeah, usually there's not too much to do other than to pay for the transaction fees. Can AMM liquidity mining become a sustainable business model? Yeah, I mean, it kind of depends on how you look at it, right? Usually what ends up happening is you have to look at what your outlook is of the project, right? What ends up happening is you get that protocols token, and the protocol could mint a lot of tokens, or it could mint not so much tokens. So it really depends on sort of the, I would say, output. And yeah, I would say a lot of these projects are not sustainable because the way that they keep printing tokens. But then I if it's a bull market, people like just buy them anyways for whatever reason. So it just kind of depends on how your outlook is for the project. But I would say there are some projects out there that basically have really good token economics, such that they don't really flood the market. So they try and basically not print so much, or they have to, like, you have to lock it in for 2 months in order for you to get any tokens. So those are kind of like some of the strategies that some protocols use.
Okay, so let's see, is there any audiences still want to chat with Tommy? So we'll wait like 2 more minutes. Yeah, if there's no any other feedback, maybe we can end this session. Tom, can you now send out those materials, or something you think is that can benefit our audiences as a reading
Yeah,
material.
I'll make a note here. Did you want me to send it
Yeah,
on the
you
chat
can
or?
do the share screen also if you want to show it now. We still have like few more minutes, or you can just send it in the chat.
Yeah.
Oh, and one audience asked about can he have your slide?
Yeah, definitely. I can send that out. Yeah, let me maybe compile a list for everybody afterwards, just because I don't want to.
Maybe yeah.
I don't
Maybe
want to miss
I
anyone,
will.
any link.
Okay, sure. Okay, is there anyone? Okay, Jimmy. Okay, I think that should be our final question for Tom. Okay, crypto price seems to be in limbo. So do you think the 4-year cycle has been extended?
Yeah, I mean, if I can predict the future, then I would have been rich, right? But the way I see it is, there's a couple forces, right, driving sort of the case for continued cycle, and there's cases for um, a bear market. So yeah, I can't really read the market either, but that's not my I don't that's professionally I'm not a trader. I'm just a developer in the space. So it's really hard for me to sort of decipher all the things that are going on. But from an innovation perspective, I think that is definitely there. It's just maybe regulatory perspective that gives me pause going forward. So yeah.
Yeah, I think this part webinar part one is quite informative, especially when Tom is explaining a lot from the developers' perspective and views. Yeah, so if there's no other questions from the audience, then we will end the part one workshops of today. So big thanks to Tommy for joining us today. So
Yeah, anytime.
Yeah, thank
Okay.
you so much.
Thanks everybody.
Thanks. Bye.
Bye.
Yeah, so we will now enter the break time now. So please back to this webinar room at 2:05, and we will follow by part 2 workshops by Louis from coinunited.io. So see you guys later. Hello, all online audiences. So welcome back to today's webinar. And we are entering the part two of today's webinar. We will learn about the blockchain landscape and regulations in Hong Kong, crypto platform in DeFi, in CeFi and its risk. And also we will talk about digital assets regulations and effects on fiat on and off ramping. So if you have any questions about the content or any arrangement, you can enter it in the Q&A sections and our guests will answer it one by one in the subsequent panel sessions. So we have Louis today with us, the honorary consultant of CoinUnited.io as our speakers for these sessions. So Louis has worked in the blockchain spaces for over 8 years. Okay. And is currently the honorary consultant of CoinUnited.io, the Asia's largest cryptocurrency platform, and they establish and operate Asia's largest Bitcoin ATM network and provide over-the-counter exchange, investment in blockchain startups, and hosting cryptocurrency seminars. Louis is also the blockchain course tutor in FIFAworks, the host of the radio show Blockchain and You. And moreover, Louis is one of the partners of Red Soldier Limited, helping the company to develop business in the field of blockchain technology. So let's welcome Louis, honorary consultant of CoinUnited.io, to share with us today. Louis, please. Thank you.
Hello, everyone. Good afternoon. I'm Louis. I think I'm introduced quite a bit, and let me self-introduce a little bit more. Okay. About me, I'm actually graduated from CHK. I have my major in computer science. I have various experiences, working experience, like I actually worked with factories before, and I already have been participating in the IT industry for more than 10 years. So I was in a company called Bresso, and we provide IT solutions. We build apps, we build websites, and sometimes recently we also built blockchain applications and setting up private blockchain systems for our clients. So we're providing consultation services. And then this year, in January, we actually co-founded our CoinUnited.io, a crypto platform, provide crypto service. And besides this industrial experience, I also am an educator in the space. I've been doing a lot of different things, like I've been creating a few radio program shows on RTHK regarding or related to technologies in Hong Kong. For example, like blockchain, like local R&D, and girls in tech in Hong Kong. So I'm quite dive deep in the IT industry in Hong Kong, in local. Okay, my company actually is quite a Resso is IT savvy. It's a very technical company. We are actually the first Google Cloud partner in Hong Kong, and we have a company called also own a e-commerce platform called Tier, which is a store builder. So you can use a mobile app to build your online store, and just within a few clicks, and you can finish all setups with the logistics and the payment systems. Also, we are doing a lot of very big scale systems like concert ticketing systems, and also one of our famous customers, TVB, who built a set-top box, a mobile app for them. So doing video streaming and used by a few millions customers every day. Okay. So my other role in CoinUnited is quite new and just this year. So we have over 10K square feet headquarters in Causeway Bay, and also we have a new place in Tsim Sha Tsui. We are providing crypto OTC service. That means customers can just bring along cash and then exchange in with cryptocurrencies, whether take away with their own wallet, store in our own wallet, in their own wallet. So another space that we are heavily investing into is we bought actually a lot of NFTs, and this is part of the news that was shared earlier this year. And obviously, we're investing a lot more than this amount currently. Okay. So besides IT and crypto experience, I also have been teaching about blockchain technology since 2018. The reason why I joined the education industry is because when I tell the customer what is blockchain and when I want to help them to provide some consultation on blockchain systems, most of the time at that moment, people are not so familiar with blockchain technology. And every time I have to start teaching the customer from the zero. So that makes me like, okay, so the technology might need a lot more promotion or to general public. So that I try to teach in the IT Institute, and then it's already 3 years non-stop, and I teach 2 classes every week, and even haven't stopped during the COVID virus. So besides that, I recently also running a new course about crypto investments. So if you're interested, please let me know, and maybe I'll get you some more information. Before that, I also was the honored guest on Apple Daily, now closed, to have 2 seminars talking about Bitcoin and some like DeFi. Okay, so let us get into the main content. So I think every one of you has heard about this sentence: software has been eating the world. Software is eating the world, right? So actually, yes, and I think you know that because every piece of our life is already occupied by software, and we actually can't live without software or internet, right? So for example, like Google, you can't go online without Google Now, right? Everyone uses search engines. And then like Uber, when you go out to take a taxi to the car, you need to use the app. And when we have time, we do check out our friends' status on Facebook and other social media, right? And during the lockdown, we have been consuming a lot of video streaming services like YouTube, Netflix. So software is already eating the world, right? But actually, it's not yet complete because software is just haven't touched the most important part of our life, that is money. Okay, but now with cryptocurrency, now software is actually also money. So that means it is actually the last piece for software to eat the whole world. It's the last piece of the puzzle, because money is now a software, so we can do program money. We can do a lot of different kinds of automatic money management, like transactions, like finance, a lot of different kind of applications. That all starts from the very beginning, from the first blockchain system, Bitcoin. Bitcoin is actually the first blockchain system. Before Bitcoin, there's no such a term called blockchain. So it's invented by Satoshi Nakamoto in 29. So someone heard is rumoring that this Satoshi Nakamoto is actually Elon Musk these few days. It's very interesting. A lot of people try to say he is actually the one who invented Bitcoin, and then suddenly some news say that Elon Musk is actually everyone behind, because he owns PayPal. He got a lot of experience in payment and money. So yeah, it's a very interesting story. You can take a look on the internet. So everything starts there. It's actually just a 9 pages white paper of describing what Bitcoin is solving. It's actually just a ledger system for money, but it's in a decentralized way. All it starts because there was a financial crisis in 2008, and then the government decided to do a QE, and someone does not agree with what the government do. So they start this new system. They provide a new platform, a new kind of money. So this money is a lot better than the original one, because no one can control the supply by manipulating some centralized decision from bank or government. So it's actually a revolution on money. It's a new type of money. It's an upgrade version 2 of the money. So, but it's everything is running on software. So now, actually, people owns all the money records, but not the bank and not the government. So it's a very revolutionary product, and it's a bit anti-government. So there's always a question about Bitcoin is not backed by anything. Bitcoin is based on a thin air, right? Nowhere. But why? But why its value is going up so recently it's also around 50K US dollars. So it's a very philosophical problem. What is value after all? But people always trust US dollar and gold. But why do you think gold has value? It's a very big question, right? We know that gold is has a limited supply. But do you know every year there is new gold mined from everywhere in the world? So what we say gold supply is limited is actually not that limited. And we don't actually know the actual limit of how many gold the Earth has. And you think about that, like Elon Musk, they're doing a Mars exploration, space exploration. There are a lot of planets in the space, and you just can't doubt that, and they suddenly found a very big bulge of gold on Mars, and then they ship it back to the Earth, right? So everything can happen. So what we're basing on the gold value is that based on the limited supply of gold, but actually we are not certain about the supply of gold. So this is not accurate at all. Especially to someone who do maths, so like we, the computer scientists, right? So you think gold has value, and I doubt that, right? And why do you think US dollar has value, right? US dollar. Actually, they are doing QE every year now, right? Just like currently the COVID, the virus, and then the government decided to issue a lot of new money to the market. And then it start inflation again, right? So value is not the dollar of US, the purchasing power of the USD is actually dropping. And you may say, you may see that there are a lot of different investment tools, the prices are rising these few years. That's not about the prices rising, it's because the purchasing power of fiat is dropping. It's a relative concept. So US dollar's value is actually in question when they can print money anytime they want. So what is the value of USD? Right? And when you come to compare fiat, there are also a different kind of fiat, and you have certain different levels of confidence. And for example, like maybe if you have the choice to choose between CNY or USD to hold for your asset, most people would prefer USD. Why? Right? So if everything fiat has value, but why is some fiat have more value than other value and than other fiats, right? So after all, values is all about trust. It's all about trust. What you think it has value is because you trust it has a value. That might not have an actual value behind, just you trust. And when more and more people trust a certain kind of asset, its value becomes true. So value is created when more believers it has value, and then the asset will have a value. So value is really like a village. So some Bitcoin maxers, they call themselves very religious, right? It's like a religion. Why Bitcoin has value? Because we trust it. Many people trust it. Many people are willing to use a significant price to purchase. And this is supported by our big group of community. So that's why there's value. So crypto, I think Bitcoin has already been invented in 2009, and it's already 12 years old. During these 12 years, I think its value is very proven. And during any time, people are going to buy it, whether at what price, I'm not sure, but it certainly has some value. And more and more people believe that it has a value, and more people trying to buy it as a store of value. It's now becoming a new form of digital gold. I think its price is going to match to chase back to the gold value of gold in a few more years' time. And that's also what a lot of other people thinking. Okay. So I think in this year, you have been seeing a lot of news about traditional finance, the big names buying Bitcoins, right? Actually, there are a lot of listed companies, there are a lot of fund companies, investment companies, and even private companies. And also about, there are also a few countries' governments are buying Bitcoins. So you think, you know that their Bitcoin is getting more well accepted. It's not about 5 years ago that everyone thought it's a scam, it has no value, as a Ponzi, something like that. No one said that again in this year, I think. Yeah. And we can take a look of a live website. So this website is called Bitcoin Treasuries. You can actually see which companies and which country or governments are owning Bitcoins. For example, like this chart, you see that the most craziest company in the world that possess a lot of the most Bitcoins is the MicroStrategy, as a listed company in NASDAQ. They owned 132K Bitcoins, and the value is about $5 billion US dollar. It's crazy. The company's net value is just a little bit more than the Bitcoin it holds. So the company does not worth anything. They're just Bitcoin. It's a very strange company. And you see that Tesla is the second one. They also have 42K. And there the list goes very long list, very long list. And you see some actually companies from Hong Kong, this May 2, as a Hong Kong listed company, they also filed 9041 Bitcoins in the book. So you see different countries and different listed companies are purchasing Bitcoins in their portfolio for listed companies. Okay, and then when you scroll down, you see there are a lot of different countries and governments that also own Bitcoins. And maybe you heard about El Salvador. El Salvador is making Bitcoin the official currency in the country, but that they only possess a little, not very much, just 1,000. And when you see the top of the list is Bulgaria, 213K. It's also very big money, 9 billion. Okay. In private companies, there's a lot more, like Block One, like some foundations and some ETFs. This is a very famous Grayscale Bitcoin Trust. And they also purchase a lot of Bitcoins. And having said that, they also have a lot of other different kind of cryptocurrencies. Right. So there are actually more are coming. That's just the current list. And a lot of the new companies, the companies here actually purchase Bitcoin in this year, within this year. So it's a really the starting of a new trend. It's not a, so it's just start. We're never late. Someone always asks me that, am I late? Am I late? I think it's not late to enter the party. It's always a good time to enter the party, because when you see the list and the speed of the growing, it's a lot more faster. And there are a lot of big names, big companies haven't been stepped into the space yet. So it's not late anytime. And let's review the past year's performance. For example, like Bitcoin. Bitcoin, at the moment a year before, it's around 27K. And then at this moment, I think it's around 40 something. So it's around 1.5x. Not bad, right? 1.5x. So, and then the second largest market cap cryptocurrency, Ethereum, last year at this time is around 700. Okay, so currently it's around 6x. Quite good. and then more coming. So like for this, Solana is now already in the top 10 coin market in a market cap. A year before, it's just $1, and now it's actually more than 100, near 200. Okay, so crypto is actually a very attractive space. What other asset in the world that you can buy and go 100x in a year, right? It's very exciting and a very profitable industry. That's why investment companies and even governments are going to join the party. So crypto is actually a very attractive new asset class. It already become a new asset class. When you compare with traditional investment options like HSI, the Hong Kong Stock Index, HSI for the 5 year, this is a 5-year chart, okay? You see the bottom, the straight line, the blue line is actually HSI, this one. It's flat, right? In a 5 years time, when comparing to the yellow line, which is Bitcoin. So you see, it's a lot more attractive. And in 5 years time, it's actually went through quite a lot of percentages, around like 1%. It's now around 5,000% in 5 years time. So that's crazy, right? When comparing to other traditional assets, if you're a good investor and you're good at math, after you see this, you won't invest in stocks. And when you also know that in the stock market, there are lots of crises happening, like the evergreen company, right? So why the hype? Why is crypto so attractive? Why everyone is buying? Because in the humanities history, there are a lot of disruptive innovations. You know, in the past, there are a few jobs that already disappeared. Like the one on the left-hand side. It's a job class before there is a toilet. It's an automatic water toilet. So they need to move out their feces every day with a big bucket. It's a very dirty job, right? So, but after the invention of a toilet, this kind of job just disappeared. And on the right-hand side is also another job that already disappeared, is that the lamp lighter. When it becomes dark in the night, there are a few guys who pick up this long stick and lit up the lamp on the street, because the lamp is run on oil and there's no electricity at that time. So that's a very disruptive innovation. That means it destroys something old and build something new. And the new thing is a lot better. It's a lot better. This may bring you some pains and some structural change in the economy, but eventually everyone is enjoying the benefit. It's a disruptive innovation. For cryptos, it's actually a disruptive innovation of money. So we are moving money to a new form. It's like money 2.0. So that's very attractive, and everyone buys in and pour the money from fiat to crypto, because the hype is there and there are lots of money going in, prices goes up. So invest in crypto is a very common behavior now, also in Hong Kong. People are becoming more interested in buying crypto. But you know, crypto is not stock, and it's not fun, and it's not like a real estate. So cryptos, it's actually a lot more than just buy and hold there. Cryptos actually can get you a lot of passive income. So actually many people are trying to use the crypto to do more passive income, to earn more. So if you're storing your cryptos in exchanges, just in the exchanges, you open an account, store the cryptos in the famous exchanges, and then just sit there, you're not doing crypto right, because you can utilize the crypto to earn a lot of more money. Okay, so let us discuss how you can actually utilize your crypto to earn a lot more. So that is DeFi. We call it decentralized finance. Decentralized finance. So it's all about bringing the traditional finance with adding blockchain elements and bringing it to the crypto world. So this chart is the total value locked in DeFi in Ethereum systems. Okay, Ethereum is a blockchain. It's the first blockchain with smart contracts, and it's the second largest market cap crypto in the world. In last year, actually DeFi is just a very little number. As you see, it's around under 10 B total value lock here. And then what we call it as a DeFi sum. In the last summer, suddenly a lot of things happening in the DeFi world, and people starting to getting money, locking money into DeFi systems, and then it goes up. It just goes up double. You see this is like a very little, but when you see the figures, it's about 2x in a few months. Okay, and then when you see this year's growth, it's a lot more. It has been going from here, right, to January 2020 here, and then in just 1 year's time, it goes from less than 10 B to 100 more. So it's a 10x. It's a 10x that people are putting more money into crypto world and lock it in some DeFi systems. So why people bringing money in crypto and then lock them in DeFi? What does that mean? Okay, so decentralized finance actually has a lot of different kind of applications there, and everything is about earning passive incomes. So that's very attractive. When your money in fiat, you sit there at just less than 1% interest. On DeFi, you're actually earning a lot more. So how do you participate in decentralized finance and earn some money? So in the DeFi world, there are a few big categories of projects like exchanges on the blockchain. And Uniswap is one of the famous example on Ethereum. So it's actually a decentralized exchange on the Ethereum blockchain. It's just a piece of smart contract. It's a piece of code. And then everyone just go there and trade their coins automatically. Okay. And there's also another big category in the crypto world. It's called the lending. So like Aave, they do lending business. They earn the depositor earn interest, and people borrow money from there and pay interest, all on the blockchain. So it's an automatic way of lending. And there's a lot of more things happening on blockchain. You can actually buy a lot of different kinds of derivatives. For example, like real world stocks, funds, properties. You can trade that on blockchain. There are a lot of different projects on the blockchain that enables you to do the trades on blockchain instead of in the traditional finance world. And there are a lot of new innovation happening on blockchain too, like insurance. You can buy a piece of insurance on the crypto blockchains, paying your premium in terms of crypto and getting your coverage on the smart contracts. And there's also a lot of different kinds of crowdfunding activities on the blockchain, like people get the fund to buy a piece of land, to buy the Constitution of the United States, something like that. So there's a lot of different kinds of things happening on the DeFi world. You can name it. Anything on the traditional finance can be moved to the blockchain and become a new kind of a decentralized finance product. And that's a little bit not interesting, right? So what we are interested in is that how much we can earn, right? So let's see here if we're going to do some get some interest rate on here. There's a website called DeFi Rate, such that you can compare different kind of assets and how much you earn in the interest rate. For example, like if I buy some USDC with my USD, it's a US dollar stable coin, and store it somewhere like in BlockFi, I'm going to get 7.5% annual interest. It's a lot better than the traditional bank, right? A lot more better. And 7 is actually not that attractive, right? When you see the chart, there are lots of more attractive options, more different kind of coins and platforms. And you can see that there may be, if you buy other kind of cryptos, there may be some risk on the crypto's price. But when you do it just in stable coins like USDC, DAI, USDT, these are all US dollars on the crypto, you don't have actually a lot of currency risk because it's US dollar. The value is always $1. So with just converting your fiat money to like USDC or USDT, you already enjoy a lot more interest benefit. So that's why DeFi is so attractive. And what's more, that under 10% is actually a very low yield rate for the DeFi players. This is another DeFi project called the Pancake Swap. They offer some kinds of yield rate like this, 40 APR, right? And this is more crazy, right? 300 something, okay? And you think this is a lot. There are a lot more crazy projects. So I'm not going to ask you to invest into some of this kind of projects, but you see what I mean, crazy. It's 26K percentage per year, okay? So there are a lot of, it's not a scam, having said, no, I'm not saying that it's a scam. It's actually a very legitimate project, but I'm not asking everyone to invest in it because there's still some risk, right? Okay, so why they can provide such a high yield? Why? Are they scams, right? Well, it's a very normal reaction when we see a very attractive yield rate. We definitely think that it's a scam. It's not going to happen. There's nothing in the world that can provide such a high yield. That must be scam, okay? That's normal, that's normal. But when you think about it, what DeFi is doing is that DeFi is eliminating a very expensive middleman. So who? Like the bank, the agencies, the investment fund house, right? I think in the world there are lots of very good jobs that earn a lot of money, and finance is definitely one of the kind of jobs that earn most of the money, right? So when you do finance, when you are going to buy some stocks from a stock company, from a stock agency company, you are actually helping to pay the salaries, right? Paying a very expensive companies like office, and when the C-level people travel to the other places, to other countries, they may take a very pretty jet plane. And where's the money comes from? Actually, all from customers, right? So it is a very expensive middleman when you invest through this kind of third parties, because you need to help to pay the expenses, right? And having said that, this kind of companies are not always earning. They sometimes they lose, right? For example, bank. When a bank borrow the money, lends out money to someone. For example, like someone is doing a mortgage, placing their property's right to the hand of a bank, and then he borrows a bunch of money out. But when he cannot pay back loan, the bank have to liquidate. The bank has to liquidate the real estate to compensate the loan, right? So there is some lending risk. This kind of operations actually takes a lot of time and takes a lot of expensive fees. For example, you need to employ a lawyer, you have to do an auction to sell the property. And sometimes when the market is not doing good, the property you are doing auction actually cannot cover the loan. So there's a very big lending risk. Banks are not always earning. You think that they're earning, they're making money very easily, but that's not the case. Sometimes banks lose very heavily because they cannot collect back some bank debt. Okay, so blockchain actually revolutionized finance. They eliminate very expensive middlemen and help lessen the lending risks, so a lot of different kind of risks, such that DeFi most of the time, a successful good DeFi protocol has a very low risk and always earning money. And when this kind of DeFi protocol is doing things more efficiently, this protocol will actually reward back, right? Reward back to the one who are helping the DeFi protocol to grow. For example, like we deposit some money to let the DeFi protocol to grow to others, we can enjoy a higher interest rate because the DeFi, the lending program is just a piece of program. No one is running a physical office, no staff to pay the salaries, and very efficient, and they have a far lower risk of defaulting some loans. So DeFi protocols actually can provide you a lot more passive income. That's not scam. But you have to be careful that there are actually some scams. So I'm just saying that not every DeFi protocol providing you a very good APYs and scams, but there are some. Okay, be careful. Okay, so why DeFi can actually earn us so much money, right? So traditionally, when we do crypto exchange or stock exchange, we do it through an order book system, just like this picture. On the order book, you have the ask side and you have the bid side. So the traditional exchange actually matches the bid and ask. It's a mechanism to match the bid and ask, and through the matching of a bid and ask, a market price is created. So, but using this kind of traditional exchange, maybe everyone have tried to use a traditional exchange. You have to first deposit the money to the exchange, right? And that means the money is already not on your hand. You are trusting the exchange to do it well for you and to keep your money safe. Okay, that's not really good. That's what we call the centralized exchange. A centralized exchange. Everything centralized has some risk. That is not very good. For example, like Facebook, they can do censorship, right? The bank, they can ban your account. Everything centralized has some risk that is not that good. So that's why we need the blockchain to help decentralize and improving the existing systems to more democratic way. Okay, so yeah, and this kind of exchange, to operate exchange is very difficult because you need to have a lot of money investment. You have to have money and you have a lot of the assets to sell such that you can close the bid and ask game. And when there is no buyer or just buyer or just only seller, no trade can be done. No trade can be done because you cannot do a matching pair. So traditional exchange works like this. And there's a lot of problem for traditional exchange that's captured to something on the news. For example, like this one. So you know, in the world now, actually, just very few countries have regulation and licenses on exchanges. So this news is saying that most of the Bitcoin trading volumes and figures are actually fake. So when you see charts and prices, that might not be genuine. That's just some data provided from they declared about the exchange, but that's not the actual exchange stats. And we trade based on the stats, right? And we don't actually know what the exchange is selling. So sometimes you see that on the right hand side, the pricing chart just goes crazy. Suddenly there's a very long needle going up or going down. The price suddenly change a lot and you don't know why. That's always the case. And there's more, and for example, like there's a very famous Canada exchange, crypto exchange. That's the owner of the crypto exchange died with his private key. And these incident actually locks up all the customers' fund, because what we said is that when you want to do a trade, you first need to deposit the cryptos to a centralized exchange first. And then this owner, only this owner had the access of this wallet, and then he lost the key because he just died, and everyone's money is locked up. This is what we call the custodian risk, because all our money is custody on a crypto exchange, and you have to trust it. You're heavily depending on how they keep your money. So that's a very big risk for traditional exchange. And there are lots of more. And if you're in the crypto this year, you will remember at the time in May. After May, there's a very big drop due to some China government policies to crypto markets. So the crypto market actually dropped a lot. And when the market drops a lot, the centralized exchange starts to become inaccessible, because the server just died. And there are lots of different kind of stories. For example, this news. Someone is losing 70 million China yuan because he just can't get into the central exchange to deposit for his position. So his assets is all gone just because he can't access the server. And there's more, and the government is not fan of cryptocurrency most of the time. So in this case, Italy wants also a very big exchange finance. And when your money is deposited in such exchange, and when the government does not like it, your money is also at risk, because they might freeze the assets. Okay, so let's take a break at here about around 2 minutes, and we'll come back. Okay, so we're back now. Just now, maybe the camera just shuts off for a few minutes, so we are back in now. Okay, so we have discussed about how traditional exchanges work, and what's the risk behind, and what's the problem. And then for everything that is not doing good in a centralized way, we can think about a new way to do it in a decentralized way on blockchain. So there are a lot of different kind of decentralized exchange. Decentralized exchange is the type of cryptocurrency exchange allows for direct peer-to-peer cryptocurrency transactions to take place securely without the need for an intermediary. So that's the definition. I think the key word is here. There's a peer-to-peer cryptocurrency transaction. That means you're not placing the money to a crypto exchange company. You're actually dealing with another one and another one guy who is selling the coin to you. So you're actually doing a peer-to-peer transaction to exchange from one coin to another coin. And this you does not, and through the blockchain, you don't need actually a third party or a middleman for the trade between you and another guy that you don't know. This is the revolutionary exchange way. Okay, and there are a lot of advantages like in a traditional exchange, you need to do a lot of know your customer, KYC checking, like providing a ID card, the name and your face and address or bank account, everything. You have to provide lots of personal information to a third-party exchange company. But for DEX, it's actually on blockchain, everything is anonymous. All the DEX knows you about is your address. It's an anonymous number. So no one knows who are you on the blockchain. So it's a lot more private. And by doing a DEX, you actually don't need to transfer the money to the hand of other people. You still keep the money until you're doing a trade directly with another guy. So there's no custody. On the blockchain system is actually a big system with 10,000 more servers on the cloud. The system has no downtime. The server always on. There's no something like the server down or you're not going to see for errors. And through doing the DEX, there's not the middleman is been rolled out, and then we can expect the transaction fee is also less than the traditional finance, the traditional exchange way. And for DEX, it's just a program. There's no company behind, no owner behind, no one can control the funds, and there is no politics and regulation. Actually, no one can try to censor the product, to stop the exchange. No one, literally no one. Just like you can't stop a vending machine. Okay, it's when it's built, it's going to do its job until the end. So it's a lot more efficient than a traditional exchange. And for those who run a DEX, who run an exchange, who wants to do an exchange business, you also don't need to be a very big millionaire, a very wealthy guy to start an exchange, because now the DEX enables you to open an exchange without initial funds. So even if you have zero money, you have zero funds, you can still start an exchange, because an exchange is just a program. The program takes one coin of you and then returns you another coin to you. So it's just a program. They don't need the money. The money actually are provided by other players who want to do the exchange. So DEX is like just a vending machine, what I said before. So when it's well programmed, it's like you insert some coins and then you get something else back. So it's all automatic. So who provide the funds? Trader actually provide the funds themselves. So we can deposit some money to trading program, the DEX program. And then the DEX program use our funds to facilitate the trade for the exchanges. And then in turn, the fund providers can earn the transaction fees. Instead of an exchange company earn all the fees, now this fees is spread along, just a spread amount all those traders who provide the liquidity to a DEX to facilitate the trade. So it's a very efficient way of fund management, and you don't need to own a lot of money to start an exchange. And when you're using the DEX to do trade, it's a lot more efficient and costs you less fees. And it's never stop. It's 7/24 non-stop, just because it's an automated program. And actually, there are like a big centralized exchange, what we call the CEX centralized exchanges. The centralized exchanges are actually all moving to DEX. For example, like the one on the right-hand side, Binance, their owner, who is the most wealthiest man in the world now, he also said that sorry, the days of centralized exchange are actually a number. That means centralized exchange is going to cease. They're going to be less centralized exchange because what? Because every centralized exchange will move to DEX finally. For example, now every centralized exchange has its own blockchain and its own DEX on the chain. For example, Binance has a chain called the Binance Smart Chain (BSC), and on there you can do the trade on a PancakeSwap DEX smart contract. So instead of going through Binance centralized exchange, you can do the trade on BSC and in a decentralized way without any custody, using less fee. Okay, so this is not just limited to one company. For example, like another very big exchange for B. This company has another new chain, like the name is Heco, and on Heco there's PancakeSwap, Uniswap like DEX called the MDEX. So every crypto central exchange is moving. They're planning for plan B, because maybe in the future in the crypto market there will just exist the over-the-counter trade that people bring along to fiat money and to exchange for cryptos, and then they exchange the cryptos on the DEX. So there is actually no room for a central exchange in the long run. I would say only in the long run. It's not going to happen in a few months, but in the long run. And that's also what Binance CEO CC also said about that. Okay, so after we covered about DEX, we're going to talk about traditional lending. Okay, for the lending, for traditional lending, there is a bank in the middle, right? So we, the savers, we put in the money to the bank, and then the bank lend our money to other borrowers, and then these borrowers pay us interest to the bank, and then the bank, after deducting all the expenses, we have some interest got paid. Okay, this is the way traditional lending do it. But now, actually, if you're doing even if you're doing a time deposit for a year, the interest rate is super low. It's as low as maybe 1% or less than 1%, I think. But why the money is so low yield comparing to DeFi? What's happening on traditional lending, right? Problem with traditional lending is quite a lot, because there are a lot of different kind of loans. For example, if you're in Hong Kong, I think you always got calls from banks or from other financial company asking you whether you need the loan. And if you said, yes, I need, you actually don't need to pay any collateral. You don't need to have property. You don't need to lock up some stocks, or you don't need to have money in the bank. They just borrow you money, and with a very low interest. So like this kind of loans, it's quite risky for the bank, because there are no asset backed by this loan. You don't know whether this guy is going to pay back all the loans. So that creates some long loans. Even when the collateral is in place, the liquidation of the assets takes time. So it's very long lasting process. It's taking about a few months or a year. When you can't pay back a loan, the bank take away your property and put it on the sale. That's called a foreclosure. The foreclosure is not always winning. It's not always winning. The bank might lose due to the market price, due to the long lasting processes and the legal fees. So on this news, you see that there's a loan loss from a bank, and the loan loss is growing as a 10x. So because banks is doing loans in a less careful, more how do I say, it's in a higher risk way. So they just want to get the money to loan out. They don't want to keep the money themselves. There's too much money in the bank. So they're not censoring, they're not doing a very harsh application filtering. That's why they're getting a lot of loan loss. So lending is in the traditional world is actually not performing well. And just as what I said before, the bankers, the staff in the banks actually got paid in a very nice, decent salary. So it's expensive. And it's very, if you go to the bank before, you know that they're very bureaucracy. There are a lot of bureaucracy, and it's not an efficient company. Every year you heard about a bank cutting labor force because it's just all about efficiency. And efficiency can kill a bank because they are earning on just the interest rate differences, right? They on one side they borrow the money to someone, on the other side they pay the interest to the savers, right? So everything is talking about a very few percentage of efficiency that could kill a bank. Okay, and what is more is that what we discussed before, the fiat inflation, that everywhere is doing quantitative easing. Money is printed every day. There are a lot of more money supply, and that cause when something the supply is going up, the price is going down, right? The purchasing power is going down. So the loan rate is also low. So actually, I think it's a very good if you it's a very good timing if you want to do some leverages because the bank's money is very cheap. I personally borrow some. Yeah. So what does a decentralized lending provide us? Same as the decentralized exchange. There's no KYC, no KYC. So you don't need to let someone know who are you. And I don't even care how's your credit record. In the traditional lending, you have to provide a lot of personal information like checking my credit records. Is this guy a good lender? Will he be able to pay the loan? They guess it, right? They estimate, they evaluate, but that's no guarantee. Like, okay, this guy has a job, he has a well-paid job, maybe he can repay the loan, right? But who knows? Whether when the economic downturn comes and you lose a job and then you can't pay the loan, right? So that's not always work. But on a decentralized lending, most of the time, is collateralized lending. That means you actually deposit some crypto assets to a blockchain program, and then you borrow something else away. So at the worst case, when you cannot pay the loan, the program will liquidate your asset. Automatically. It's an electronic, it's a digital asset, and it's all done by a program. There's no checking, there's no manual approval. Everything, if the value of the collateral drops below this line, and then the program will liquidate your asset to pay back the loan. So the lender does not need to come back and to pay the loan because I already liquidate everything. I sell out your asset. I already help you to repay the loan. So a decentralized lending program actually always earn. They're always earning interest because it's an automatic program and the liquidation process is all automatic and the digital asset can be traded anytime. You don't need to go through legal processes. You don't need to go through physical auctions. You don't need to wait. It's fast, automatic. Everything is done by an electronic program. It's a piece of program, a code. Okay, what we call this kind of lending is called over collateralized lending. That means if you deposit $100 worth assets into the program, maybe you can borrow at most $50 out. So you deposit some coins and then you earn and then borrow another kind of coin, but the value you can borrow is always less than your asset. So the program actually have some room for the risk in a market downturn. Okay. There are many major lending platforms. One of them, Aave. Aave has been on the news these 2 days. You can try to Google Aave. Okay, Aave is doing a very good job. Okay, and they are linking some real world assets. They're linking some real world assets like properties, and such that you can use the real world property to as a collateral and borrow crypto. It's, everything is happening. Maker is also another very famous lending protocol, and they are also doing some real world assets collateral. And there's a lot of more lending protocols like Compact and Alchemist. Yeah, you can take a look and then you can try. But beware that lending actually means you have the risk of liquidation. So it's not all about earning. You're not always winning, right? When in an economic downturn, you also have the risk of the call loan. Okay, you're going to be liquidated with all the asset gone. So beware. For example, like this chart is what we see before. So this actually lending. Why we are earning this deposit APY is because we deposit the money to the program and then the program borrow to others. So we can in turn earn some interest. So when a deposit guy can earn 9%, so you see that someone else to borrow is around 13. So the difference between the lending and borrow is around 4%, right? It's not as much as a bank. For bank, this interest difference could be a really wide gap. So having talked about some major DeFi projects like DEX and lending, it's not always about good things. There are also bad things. There are a lot of risk of DeFi. For DeFi, actually, what we discussed before is that decentralized finance is actually a piece of smart contract, and the smart contract is a program. Every program has bug. You have to admit that, right? Every program has bug, and when the bug is not discovered, you never know there's a bug. Every programmer thinks that he's doing the good job, he's doing the right job, the program is correct and secure. Otherwise, he has already changed that, right? So bugs exist. And when the bugs on some maybe on website, on mobile apps has bug, it's okay, right? At the worst case, we just kill the app, we restart, or we just stop using that service. But for DeFi, it's all about your money. If the program controlling your money has bug, you at the worst case can lose everything. You lose all the assets deposited in there, and everything becomes zero. And that's a very big risk. And because we're just depending on a program. There are lots of DeFi hacks or bugs. Here you see that there are a lot of different news, and actually comes from recent time. You see that this one is from December 20. This one is from October. This from December, October. I think every week there are programs having bugs. So involving different kind of levels. For example, like 30 mil, 600 mil. Well, it's a very big number, right? 22 mil, 120 mil. That's always happening and non-stop, because every day there are new programs, there are new bugs discovered, and everyone just deposit the money because they see a very juicy APYs, right? If you have the money, you see a very good APY, you just add in, you deposit the money, but the program then find out that there's a bug or someone, a very genius guy exploit the program and get every money, every piece of, every coins out. So it's very dangerous. You have to understand this risk. So, and what's more, so smart contract actually most of the time are open source. Open source has advantage and disadvantage. Open source actually making bugs spreading faster, because developer can now copy and paste the codes and make a new thing. So if a bug is in the old piece of the code is in the source, in the original source, when you copy and paste, you also include the bug. So the bug is spreading a lot faster than before because of open source. And open source at the same time also disclose some vulnerability at the same time, because you open source, you want people to know how your program used, you want people to trust you, but the hacker also has a very better understanding of your program. So open sourcing actually opens to some new risks. And when something bad happens, for example, like some hackers hack the money, based on the design of the blockchain, because it keeps everyone anonymous and it helps to help us to preserve privacy. Under this design, investigation of the lost funds could be very difficult. Hackers, most of the time, can get the money away without catching, without being caught. This is the truth. Unless the hacker is very stupid one, he hacked the program and then he got the money going back to the centralized exchange. And then the centralized exchange can blacklist this guy and lock his fund. This is doable, but I think generally the hackers are not as stupid as this kind. And besides that, when you play crypto, you have to be very careful because there are a lot of scammers everywhere. And what I say is that when you play crypto, you better assume everyone around you online contacting you saying that, hey guys, he's a scammer. Most of the time, scammer. No one will try to come and chat with you. Especially be careful when you need some support. Maybe you are going to ask some guys to help you out on some bugs or conditions. You normally go to Discord or Telegram or something, Twitter, and to ask for help. And then someone will impersonate the support team to contact you and ask you and pretend like he's going to help you. So scammers everywhere. And for example, like this kind of news, there are actually fake projects they call the rug-pull projects. The project setup is at a very evil cost. They just want to get all your money out. Everything is fake. When you deposit money, they can take away your money immediately. And then guys like this, they publish on the website. We scam you guys and you can't do shit about it. And that's one of the projects that's called the DeFi 100. And it's taking 32 million US dollar funds away without thanking, right? And they just publish this kind of shit in the website. That's very crazy, bro. So scammers are everywhere. You don't really deposit money to someone offering you a very attractive APY only. You have to do your own research. Okay, DYOR. Right? There are a lot of scammer rug-pull projects. Okay, and sometimes the program is just working as expected. It's a design fault. What we call this a design fault. Like some calculation mistakes, the token economics or tokenomics is wrong design. For example, in this year, there's a project called Iron Finance. They designed the project wrongly, such that they caused a very large-scale bank run, and this bank run actually results in crashing the coin to zero value in a very short period of time. Okay, that's crazy. That the program is not a buggy, not a bug, and no hackers, but just they do the calculation wrong. The design is wrong, and it will cause some asset to go to zero in some certain exceptional conditions. That someone haven't thought about that before. So that's very dangerous. It's very dangerous. And this is happening very frequently now, wallet risk. I have a few friends losing everything on all chains, all wallets, even those deposited into the DeFi projects. It got withdrawn and sold on some DEX and take everything away, and NFTs including. So you have to very cautious about your computer security when you have a crypto and when you are playing DeFi. Because nowadays, for example, like some Windows machine, they always have a lot of malware or spyware targeting such systems. And when your system is infected by some malware or spyware, normally it doesn't cost you anything because, okay, let them spy, right? I have nothing secret. Let you see, I have no damage. But when you do DeFi, when you have a crypto wallet on your computer. Maybe you store your passphrase on the computer. That's very, very, very dangerous. This kind of spyware and malware can do a lot of things. For example, like they can scan your file system, search for your keys, search for your secrets, and get your private key. Okay, and then they might also be able to replace the transaction you're doing. Maybe you click on some buttons you want to buy an NFT, and they can replace that transaction to become another thing, to send out everything to the hacker. There are a lot of examples this year. So be careful on the wallet. It's very, very dangerous. And when you're in doubt about how to protect yourself, you better split into different wallets, into some small wallets. Don't put everything into one single wallet. Okay. So DeFi is very dangerous. So we know that, right? Everyone is at risk, and so many failed cases, so many people losing money. So there's another angle. So what if I still want to participate, but I really concerned about the risk? There's an option. The decentralized finance is a little bit complicated. Sometimes people call it DeFi or CeFi. Okay. What they do is that there's a company act as a middleman to help the customers who are not so tech savvy to get the money, to get the cryptos, and then the company help them to invest into the DeFi, so that your risk is shifted to a centralized company. You own some cryptos, you pay them fees, you give the cryptos to them, and they help you to reinvest. Just like traditional finance, right? When you go to buy an index fund, you buy some pension funds, you give the money to them, and then they help you to invest. And in turn, they provide some interest, okay, some return. So this includes what we call this custody of crypto, just like what the traditional finance do. So your money is already passed to a third party. There's a trust issue. You have to trust the guy who are helping you to manage the cryptos. So you have to think about that, whether you're trusting this centralized body, whether it's trustworthy, or you're able to get back your money in some cases, right? Okay. Obviously, it will be getting less profit than DeFi, but you have lower risk. At least you don't own your wallet, right? You don't own your wallet. You don't do the DeFi yourself. And when something happens, you actually can find someone, right, to find the support, to claim the company, to sue the company, to get back your asset. You have the chance, right? So that works like traditional finance, some mutual funds, but just the assets now changes from some traditional assets into cryptos, so that they work the same way. When you're doing on centralized exchange, now some centralized exchange also provides lending interest. So they are not just providing you an exchange services, they also provide you the saving interest. You can do flexible saving like here. For example, Binance, they provide like this, like 6%, 20%, 12%, 3%, something like that. So it's not so attractive compared to DeFi, but okay, it's okay because you know, you can find them. You can get their support. The money in their hand is better than you to hold yourself if you're in doubt, right? So there are a lot of different kind of platforms providing such interest, such that you deposit the money there and then you get the interest. But you have to be careful because some platforms like this one, the Celsius, they advertise to be like 7.8% on BTC, right, on Bitcoin. But this 7.8% is actually on the first 0.025 Bitcoin. And after that, that's just 3%. Okay, so that's not real. That's not a real yield. They have a cap, the cap limit. So you have to be careful. You have to do your calculation. Maybe you want to split the fund into different portion and deposit into among different platforms to earn the best interest. So be careful. Like this, another platform, they said that you can earn up to 3.5% in Bitcoin, right? And then they said that this 3.5% is not always there. It's just an introductory offer, and for the first 90 days. So this 3.5% doesn't yield you 3.5% because it's just a year. In a year, there's a lot of, there's a many 90 days. So you just got a portion of this 3.5%. So you have to be careful about this kind of tricky advertising. So what is the risk of the CeFi working like this when you're depositing the cryptos into this kind of CeFi companies? So obviously there's custody risk. Your money is on the hand of another company. Okay. So when this company winds up, or like the news before we shared, the owner just died, and how are you going to get back the money, right? And as it is a company, it's also subjected to some regulatory risk. For example, like the government, maybe someday they want to govern, they want to have some new legislation passing and buying some kind of activities they're providing. How is going to work out? How are you going to get back the money? Or are you able to get back the money because maybe they already freeze everything, right? So that's regulatory risk. And there's a lot of more, like, for example, if you are like us, we are Hong Kong people, you're now using some foreign exchange. We are having some more political exchange because some foreign exchange just doesn't want to serve Hong Kong customers. So that's due to some political reasons. Okay, and what is this kind of CeFi companies do when they got your money? When they got your money, they actually put your money to DeFi. So by doing CeFi, you're not going to get risk, to get rid of the original DeFi risk. You're not going to say you were safe when depositing into a CeFi. Recently, there's example. So I'll show that in the next slide. So you see, cryptocurrency investor locked out of 190 million after exchange finalized. That's the Canada exchange case that we mentioned before. It's actually involving 190 million US dollar. So that's a big money. And when your money is deposited into some CeFi company, you are going to take this risk. Okay. And for example, like the platform that we mentioned a few slides before, the Celsius. The Celsius actually is a CeFi platform, and they are a company. They're taking your Bitcoins and give you some yields, right? But after they taken your Bitcoin, they actually use the Bitcoin to invest into a DeFi project called DAO. So when the DeFi project got hacked, actually Celsius also lost some money. Lost around 120 mil. So they got lost because they put your money to a DeFi project because you don't want to directly play the DeFi project. You put your money to Celsius and ask them to help you to play. But then when the DeFi project got problem, you're not able to escape. You're still on the same boat. Okay. So whether they pay you back or not, that's case by case. But most of the time they pay back. They pay all what you lost. Okay. But you can't just assume it always happens. Right? So by playing with CeFi, you're actually not saying that you're going to escape every risk from DeFi, but just you have a better layer of security because they help you to maintain. They might have a better chance to pay you back what's hacked, and they maybe have a better team of security, so they own the asset is safer than what you own yourself. Okay. So another case for regulatory risk, there's a lot of regulatory risk. For example, the most famous one is Tether. Tether is the company behind USDT, the biggest stablecoin, and they actually take your US dollar and issue a stablecoin on the blockchain. And it's always being accused of the companies doing a lot of under table trades. They put your US dollar to do other investment, and sometimes it becomes the stable coin is not backed. Normally, one USDT should be backed by one US dollar reserve, but when you have such big amount of US dollar, you want to do investment, right? And you lend out the money or you invest in something else. When you move the money out, your reserve become less. And the stablecoin is just not working $1 because your backing asset is just less than $1. So there's always risk. And if the government wants to regulate this kind of fraud or antitrust cases, they might, worst case, to freeze everything, freeze the company account, freeze the stablecoin contract, everything. So when you're taking this kind of centralized DeFi, you might end up in such kind of situation, the legal argument. Okay, there's a lot, right? Like the biggest exchange, the Binance, they're also suffering from some government decision. For example, in Singapore, what we think that Singapore is more open relatively to Hong Kong, right? But recently they closed the Singapore trading platform and withdraw this application. They're going to leave it, leave Singapore. They're not going to do business in Singapore. So it's obviously about political and regulatory, right? So it's very difficult to say. So be careful when you do any kind of investment, no matter if it's on DeFi or CeFi. Okay, so how do you choose, right? So there's CeFi and DeFi, and how do you choose? So I'll say that you think you have to ask yourself whether you are a very careful person or not. You are more comfortable to manage by yourself or manage by others. The asset you can choose, right? And the result is that yeah, you may do KYC and you may got less profit, but it's okay because you find someone like, okay, when something happen, you still got support, you still can got a company back, and you can get back a certain amount of the money. Maybe not everything, but at least you get some, right? So it depends. But for our audience, if you're already an IT professional, very IT savvy, and you have a very strong sense of computer security, and you have the time to learn, I really recommend you to go for DeFi. And if you're not that very careful, for example, you lost the keys always, you lost your wallet, you lost your phones, and I will suggest you don't manage it yourself. It's not because it's too risky to manage money like this. There are too many holes on the DeFi world, on the blockchain world. So maybe you just put your money to someone else, and you can spend your time on something you like, right? Don't waste time on this. Okay. So how do you select CeFi provider? For example, like I would say that most of the exchanges and the centralized finance platforms are not registered in Hong Kong. Most of them are registered in some BVI, Bermuda, something like that. So that means when the company has some problems, got wind up, you actually can't guarantee you can get back your funds because they're not registered in Hong Kong, they're not protected by the laws in Hong Kong. So I will say you better invest in some company that is registered in Hong Kong. Okay, and another choice is another criteria is that they provide some good return, right? If they're just going to offer you 1%, you're going to stay your money in the bank, right? And another criteria is that the company should be trustworthy and very financially strong, such that they won't get your money and go away, right? If that's a small company, they may get a decent amount for them, and then they get the money and go away, and that's very dangerous, right? So you better select a financially strong company. For example, who like Coin United. So the on the right hand side is actually our wallet app. Our wallet app provides you some exchange interfaces. You can trade the coins on the app. And we provide also very attractive what we call staking rewards, that is doing the DeFi lending. So you deposit your cryptos there and earn very good yield, up to a few 10%. Okay, depending on the assets type. So a little bit more about Coin United. We're registered in Hong Kong. We have 10K square feet physical store in Causeway Bay, so you can come up and take a look. And we are going to have a new store in Tsim Sha Tsui. We already purchased more than 1 million. 1 million is a very, very few. It's a lot more. Okay, it's around, as I remember, it's 5 million, US dollar. Purchase our own NFT. So you can go to our website and check out our collection. You can see everything in our wallet. There's nothing to be fake because it's all on the blockchain. On the blockchain, everything is genuine. We are also running the biggest ATM network in Hong Kong. You can see our ATMs everywhere in shopping malls, in maybe a laundry store or some kind of other places. So yeah, also buy from the trustworthy source, right? And you buy the coins, I think you're aware of a lot of news that robberies, including robberies of crypto trades, right? They do P2P trading. I meet a stranger and I bring a few million Hong Kong dollar cash out of the street and then help let him get my money and sell me some USDT, right? So there are lots of problem and a lot of robbery cases in Hong Kong. I think in this year it's more than 10. It's more than 10. And one of the very serious one is as the guy got kidnapped and the legs are beaten to broken. And then luckily he escaped. Okay, that's very scary. So you don't want to do the big amount deals with someone you don't know, and in somewhere that's no one goes, like industrial buildings. So that's very dangerous. So don't do it. Don't do it. And as in Hong Kong now, the legislation process is under process. You also have to put an eye on the local legislation trend, right? You need to see when is the license coming, who is being licensed, and who is going to be forced out of business. You have to take a look on that. And for us, we're planning to take apply for license if we're able to get one. And I would suggest you buy from a Hong Kong registered company, and you better buy at a physical store, such that you don't need to tell someone that you are holding a few million Hong Kong dollars cash on hand today. It's like asking the robber to rob you that day. Okay, it's very dangerous. Don't do that. Yeah, and if you're interested, you can try to install the Coinbase app on App Store, and on the account creation form, there's a field that you can input Louis as the referral code, and you will get some extra bonuses there. So there, you can search our app on the both app store. Our app is on both iOS and Android app stores, and here's the field that you can fill the referral ID. So if you're convinced and you want to try, you can install the app and go through the account opening process. Okay, so that's all for today, and I'll leave this time to Q&A session. So maybe we can see that any questions.
Okay, thank you, Louis. Okay, so now it's the Q&A sections. So if you have any questions okay, I already saw some questions. So if you have any questions, especially interest on the contents of Louis just share with us, so you can now drop your questions here in the Q&A, and I will choose some interesting or insightful question to ask Louis. Okay. So how important is government in DeFi? What are the factors are there?
Okay, so for the role of government in DeFi, I think they are able to do whether they accept it or they don't accept, right? So now the trend is that I think most reasonable government is going to accept, because DeFi generates a lot of money and government actually always wants to get more income. So the trend is that the government is going to accept this kind of DeFi, but with a reasonable taxing scheme. So if the government is going to get tax and you're going to do a suitable KYC, that means the government can guarantee your funds are not involved in any laundering things, then maybe they want to take the tax, right? So I guess so, but this is not always true because some government they are so scary and this is like a new bomb and they rather not touch it and they want to ban everything. So that really depends on which government we are talking about.
I personally have a questions as we talk about the government, the role of government. So like I recently heard of the news that the regulatory licensing for the virtual assets exchange is going to launch or already launched by the SFC. So any thoughts or comments on that regulation, or do you think whether Hong Kong government will launch CBDC one day?
Oh, actually, what I know is that the SFC is doing a lot of CBDC experiments. So, for example, they're working with Thailand. So I think they're doing experiment, but I don't know whether it will read well. But as you can see that there's ECNY in China, I really think that very high possibility Hong Kong will have similar EHKD to cope with the ECNY. Okay. So talking about the legislation, the legislation, the original plan is that they roll out some legislation plans like the licensing requirements, but at this moment the legislation still haven't finalized the requirements. But to my understanding, the coming legislation is buying general public to do like purchase a crypto and from some local companies because they are only providing service. They can the companies can only provide service to a professional investor. That means you will have to have 1 million investable fund. So if you don't have 1 million US dollar, you are not able to buy it from a local licensed body. But that doesn't mean that you cannot purchase crypto. You can still do it in a P2P way. So for example, I sell you, your friend sell you some points. You don't need to have 1 million because
just trade peer to peer.
Yeah, trade peer to peer. It's okay. It's still okay.
Yeah. Hope Louis answered your question. Okay. Do you think we will have a cross-chain solution? How long do you think until we develop this?
Okay, cross-chain is actually cross-chain is not a new thing. It's already in the space for a long time because when you have so many different blockchains, you have to do cross-chains. There are lots of cross-chain bridges, some kind of decentralized bridges, some kind of centralized bridges. So cross-chain is there, and some of them, some of the projects focus really on cross-chain interoperability. For example, like Polkadot and Cosmos, they're doing a cross-chain ecosystem starting from ground zero. So yeah, it depends. Yeah, I think they're already there.
Yeah. I think this can further dive in. So which cross-chain resolves scalability issues? What other issues will resolve? But I think Louis can also like share some of the examples of some cross-chain cases.
Oh, okay. Okay. I think for cross-chain, what we call cross-chain is that when, for example, like you have Bitcoin. Bitcoin has no smart contract at the moment, right? So you move the Bitcoin to Ethereum blockchain through a bridge. So this is what we call cross-chain. You move the Bitcoin to another chain, right? Bitcoin originally can only live on Bitcoin blockchain, but now Bitcoin can move to Ethereum, and then you can use the Bitcoin on Ethereum to put in some smart contracts and earn interest. So this is cross-chain. So cross-chain actually doesn't solve any scalability issues. For example, like when you move the Bitcoin to Ethereum, and Ethereum is still stuck. It's still very congested. So cross-chain itself won't solve scalability. And for example, like there are a lot of projects for layer two solve scalability. So they build some new infrastructures, for example, like Polygon. Polygon is one of the layer two structures, and then Arbitrum, and optimistic Ethereum, OE. So there are a lot of projects that are going to solve the scalability issues. I think scalability issues mainly exist on Ethereum ecosystem. When you go to another blockchain, for example, like Solana, you normally you won't hear about what's scalability issue. They have no issues at all, right? So it really depends on which chain.
The speed issue.
Yeah, right.
Okay, I think this question is very common. Which will win, DeFi or CeFi? Maybe it's more, I elaborate more, maybe under what purpose we should chase for DeFi and when we have to chase for CeFi.
I think CeFi will always exist. CeFi will always exist. Just like when you can invest into your own portfolio, you can buy your own stocks, right? You can manage your own portfolios. Why stock funds still exist, right? People still want to rely on some good investment plans, and they rather than deciding the portfolio themselves, they trust a professional body to provide the service to you. So CeFi actually will exist anyway. So that's just serving different tiers of customers. Someone they think that they're good traders themselves. They can manage a very good portfolio. They will say that okay, I don't buy any funds because fund give me just very low return. I rather do it myself. So this is just up to different personal decision.
Yeah, I think sometimes some DeFi users focus a lot on like want to revolution the whole system, the whole ecosystem of the finance system. But I think CeFi will always here, and they're not exclusive to each other.
Yes, right.
Yeah. Okay. How will DeFi manifest CeFi, and can they coexist? Oh, that's the question already.
I think they actually coexist because when CeFi take your crypto funds, the crypto money, they just invest into DeFi.
Oh.
They have to find some place to yield the money to give you interest. And what they can do, they can only go for DeFi. So you see the example that the CeFi protocol, if a CeFi company is jeopardized in some DeFi hack, so they coexist already. Yeah.
Okay, so how do I protect myself from hacks and losses if I decide to participate in DeFi?
That's a very good and very broad question. So I think the easiest way for you to mitigate the risk is that you buy a hardware wallet. A hardware wallet actually saves you lots of hacking experience. Because the hardware wallet allows you to manage the wallet without knowing the private key and the seed phrase. And you can only sign transaction when you have the hardware wallet with you. So it actually helps you to put a lot of more security. But even you got a hardware wallet, you still have to be very careful about phishing and about typing the correct URL, because sometimes you just don't know where you are interacting with. For example, I have a friend, he installed a MetaMask wallet extension from different names, like the MataMask, MATA, instead of META. Everything is the same. And he downloaded the Chrome extension there, and then input the seed phrase, and then immediately his money is gone. So that's a lot. There are a lot of different kind of risks when you are interacting with homepage with your wallet. You have to watch very carefully what you're doing. You just don't want to press okay, next. It's not like that. It's your money, and every click worth you not just that piece of money. You're spending $10, but you can lose everything. It's not about just $10. It's a very risky thing when you click the button on the wallet. So be careful.
Especially when all things now are like interconnected, the wallet thing, the over the cloud.
And most of the time now your wallet is not only having an asset on one chain.
Mm-hmm.
Maybe you play Polygon, Ethereum, Avalanche, Terra, everything in just the same wallet.
Mm-hmm.
And when you lose, you're going to lose everything on every chain. So that's a total loss. It's a real total loss. So be careful.
Okay, for me, I have another question. So, I'm a very newbie in crypto and DeFi, but I think most of the like the publics, the people's not touching DeFi's will have the same impression like me. Think that sometimes a lot of negative news like money laundering or like
yeah, there's a new one.
Like is a very volatile investment. So how do you think like government or even as I research, I see Coinune do a lot of seminars to or even have a trustable ATM platform to provide exchange to this user. So how do you think like any education or activities that no matter government or organization, a company like you can do to educate the public or the mass to make the whole concepts, DeFi concepts more mass adoption?
Oh, it's really a good question. I think education is very important, and that's why I've been teaching courses.
Yeah, I saw you teaching courses and be a radio host in RTHK or
yeah. So well, but after all, crypto is really a very volatile asset. It's a fact, okay? It's not a story. It's really a fact. When you see a curve, you know it's. When you play stock, you what we call the very big disaster is dropping 1% that day, and when you see crypto, it's down 30% and up 30% in the same day always. So it's very volatile wallet, and but that's why the market is attractive because it's moving. Is if you're doing the good job, you're doing good calculation, you're going to earn very big money in a very short time. So it's attractive, but you have to understand the risk, and you have to know there are a lot of different kind of tools that can help you to mitigate those volatile risks. So like DeFi, when you buy the coins, you can like depositing in some other protocols, you're earning more money, you're getting more base, and even in the downturn. So you need to know this kind of tools. I'm personally teaching a course myself, a crypto course. So in the course, I talk about like DEX, liquidity pools, yield farming, lending, flash loans, and NFTs and everything. So there are a lot of tools that you can make money on the DeFi world, but you need to really have some in-depth knowledge. In my experience, when people got more experience, they know they have the know-how, they have more confidence. The people just don't understand and they're scared. But when they understand, but like what I explained, why the DeFi protocols provide you such a high yield, and you understand that, you're okay. You're not scared because you know how the money comes from. You know where the money comes from. It's not a scam. It's not someone set up a program to get all your money away. There's a business model there. You know how the money flows and you know how you're going to earn, then you have more confidence. So study knowledge is always the key to success, I think. Yeah.
Can you share like what are the like common question your student asks you a lot during the class? I'm quite interested about that.
Oh, okay. Most of the time, recently they asked me about more on layer 2 because layer 2 coins are very hot at the moment. So they will ask me which layer 2 is going to win, and now what my answer is that the blockchain space, the crypto space, is just in its infant stage. The cake is still very small. So you're not going to be scared about, hey, okay, this chain become very big, it will take all. That's impossible. The market is so big. You know, when you go to the street, you go out to you go to restaurant. There's so many restaurants there. You're not going to worry about, oh, oh, there's a restaurant there. I'm not going to open another restaurant. You're not going to worry about this, right? Because the market is so big. There's so many big companies, many big funds still haven't entered the business. So I'm not going to scare about which chain is going to take everything and other chain has no room for living.
And I think there's still a lot of developers developing new chain and protocol.
Yeah.
Okay, what are the other common DeFi products other than decentralized exchange?
Okay, so one is lending. So we covered lending. Another like I think now NFT and GameFi are also part of the decentralized finance. So some NFTs can use some money. You can buy an NFT and get money, and then you can maybe stake your NFT and borrow and use it as a collateral to borrow money. For GameFi, you can put the game coin into some liquidity pool and you earn yields and you play games and you earn money. So there really a lot of different new things. A lot, and I am very sure that more new things are coming. Yeah.
Do you think the NFT and the metaverse thing is a hype or is it possible to like mass adoption one day, or a trend really public will accept it?
I think NFT is already proven it's a very good entry point for more general public to get into the crypto space. Before NFT hype come out, people are still skeptical about crypto. But now when you brand it as art, people are going to, okay, this is art, this is a new form of art, so I'm in. And then it comes like GameFi. Okay, this is game, this is a new kind of game. Okay, I'm in. So this kind of new inventions, I think everything contribute to get more people to jump into the crypto ship.
Yeah.
So the market is growing in many different aspects. So for metaverse, I think it's very prosperous. I'm very positive for metaverse because I see there are a lot of companies actually really building things in metaverse. Like Nike, Adidas, they all they all are creating NFTs and they all planning for the metaverse. They are going to make everything virtual. Actually, we already live in a very digital world, right? We never, as I said, we never buy CDs now, right? We don't have CDs. CDs are already digitized. So why not other things digitized, right? Arts digitized, game digitized, our life digitized, our experience digitized. That's a very normal trend, and that's not very far away because you see these kind of things many years ago in films, in science fiction. You know it's coming. It's not a fairy tale. It's very close.
Yeah, I think NFT is a soft way for those newcomers to join especially when NFTs seems like a safer way to invest.
Having said that, NFTs,
I can just buy it and just put it there and maybe one day.
Okay, I have to be very careful. NFTs in most cases have zero value. They eventually got zero value. So you have to be very careful to do when you want to purchase any NFTs.
Okay.
The risk is higher than you buying a crypto coin. A lot more. Yeah.
Okay, disclaimer, this is not a financial or investment advice. Okay, guys. Okay, so I think we will enter the networking sections. You can still ask Louis question, or if you want to get to know more about Louis, you can just state in the chat room. So I will now enable the chat for every online audience. So if you still have questions or you want to know more about Louis' background or his company, you can ask in the chat room. Okay, so just wait. So do you own NFT yourself?
Yes. I got some. Yeah.
Okay. Thanks for great presentation. Hi, Chris. Anything you want to like ask Louis?
Are this
Oh, this
questions?
is the previous one.
Okay, yes,
Yeah. Feel free to drop questions.
If you have, you don't have question at the moment and you want to reach me afterwards, you can find my Facebook page, my personal page. Please, reach me at Facebook page, Louis Lee dot crypto, Louis Lee dot crypto. So you can find me there and you can chat me anytime there. I'm online all the time, so in most cases I reply you. So no problem.
Okay, what are some challenges when trying to build a CD products versus building a purely on-chain protocols?
Mm-hmm. 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 For purely on-chain, it's actually, I think, not that difficult because everything is open source, and you can really easy to copy one, and you know the open source and some projects are already certified by some audit check, so it's rather easy. I would say easier if you're just building an old thing that you don't have a lot of innovation. But then if you are going to do innovation and you're going to make some new changes, that's very challenging. As in my examples, there are many design failures. So you have to design very carefully. You have to think about ways to hack own program every day, and that's very difficult. For a CeFi product, CeFi product, you just build a normal app. So mobile app or websites is very mature technology, and as it's a centralized server, you actually have better security control. You're less risky than doing it purely on chain, I think.
Hope this answered your question, Chris. Okay, and we can end that. Oh, we asked that. We asked that. Did we ask that?
Yeah, I think
I think
yes.
similarly, we
Yes,
asked
yes,
similar question.
The
Yeah, yeah.
I think the government has the choice, right? So we as citizens or businesses have to follow the regulation. Even what are my faults, that's really not important. But for me, I think Hong Kong is actually a very well-developed economy, and I think investors are actually very well educated. I'm not afraid of that. People are not familiar and they do very risky choices. I think in other underdeveloped or developing countries that the investor might be more risky to invest in something that they don't know. But in Hong Kong, I think it's a finance economy, right? So actually, I think the government is better to think about how to get advantage of this industry. Because you know that the industry is going to boom. So talking about billions and trillions of money. Why you just want to reject this chance and force companies out of the place, right? You're forcing companies going to other countries, making money there, and what is it's really it's really quite sad when I see some originally located in Hong Kong companies move out of Hong Kong due to some regulatory decision. So that's a pity.
I have one final question for that. So, and any countries or government you think is doing quite well in this part, like adopting the whole things you just mentioned.
Yeah, I
in
think
the regulation.
Singapore is one of the very good example there. What we call Singapore is very crypto friendly. Yeah, and I think in Hong Kong you can't do bank transfer to move money from bank to crypto exchange, but in Singapore you can, and they have better licensing instructions, they well designed, and they move fast. They start the planning a few years ago, and now we are still in Hong Kong. We are still in discussion. The license requirement is still not there. So we are actually a few years back.
Yeah, behind.
So we have done and you see there are a lot of more countries going to be crypto friendly because they want to attract people and company and money to the country and to develop it. It's a you know it's a very big chance to chase other developed countries. Right? For example, like Hong Kong. Hong Kong is has one of the most big volumes exchanges in Hong Kong stock exchanges, finance hub, and other places and locations have no such chances, right? And then it comes a new chance because oh, this place is not going, so we're going to take this cake, and it's relatively easier to do. When they do stock market, even Singapore, they can't compete with Hong Kong, right? So, but if this crypto is a new field and you're not moving, all others are moving. So, yeah.
And hopefully, like one day, Hong Kong can be even more open on the crypto payment. I think especially for e-commerce. I think.
Yeah.
Okay, is there any other questions? If no, you can, yeah, as Louis said, you can still search Louis in Facebook, Louis.coin Bitcoin.
Louis.crypto. Maybe
you can just send it in the chat.
Yeah. My handle is Louis.crypto. You can grab it on Facebook. You search me on Facebook. Yes.
Yeah, and you can if you still have any questions, but you at this moment you are not able to ask it here, you can still send inquiries to us. So if we receive any related to Louis questions or inquiries, we will refer it back to Louis. Okay. So if there is no, I think there's no on our audience's question or conversation. So yeah, I think that's pretty much of the part 2 workshops. So thank you very much for Louis to presenting for us. Yeah, I think all of our online audiences are enjoyed about this section's webinar. So we will now have a break and we will back at 4:10, 4:50. So you can grab your time to go for a toilet break or water break. So upcoming section will be presented by Kenny, the head of business development of Conflicts. So see you later, guys. Bye-bye. guys, we are back in the webinar. Okay. So here comes our final part 3 workshops today. So if you have any question about the content of the workshops, you can just drop your questions in the Q&A, and our speaker will answer you later on in the Q&A sections. So we'll learn about Flex USD, AMMs, liquidity pool analytics, and yield farming in this workshop. So I will have a brief introduction on our speakers today. So we have Kenny, the head of business development of Conflex, as our speaker. Kenny has been in the blockchain since 2017, and he is now the head of business development of Conflex. So founded in 2019, Conflex is the home of crypto yield and is committed to provide institutional and retail investor an easily accessible platform to earn and trade crypto. Conflex creates innovative solutions to bring investors and crypto markets together through intuitive yield products. And let us welcome Kenny, the head of business development of Conflex, to share with us. Kenny, please.
Yep. Hi guys, is the video right there?
Yeah.
Okay. Ooh. Hi guys, nice to meet everyone. I'm Kenny Shi, head of business development for Conflex. Conflex, the home of crypto yield. So, I have 2 hours to kind of go through everything regarding Conflex, and then I'll yield to your questions after. Okay, so about us, Conflex was founded in 2019. We started as a spin-off from CoinFloor, the UK's first spot exchange. And Mark and Sudu, our co-founders, they moved to Hong Kong to basically make the effort to build up Conflex. Where our key two cornerstone products that we're very proud of, Flex USD and AMM Plus, which enable everyday people to be able to capture yield. I'm going to go in depth into this product suite. Conflex is backed by some of the big heavyweights in the crypto space, including Polychain Capital is our biggest investor, Dragonfly Capital, DCG Group, Jaehan Wu, Roger Ver, Mike Komaransky, they're all investors as well. So our leadership, Mark Lam, he's our CEO. He started CoinFloor. He's been in the crypto space since age 19. Very Zuckerberg-like, one of the originals again in the space. And then Sudu, our co-founder, he's 20 plus years in traditional finance space. He used to run equity derivatives from Merrill Lynch trading desk, and also other derivatives desks. And then Leslie, our CMO now, she used to be the head of institutional assets at Ember Group, right? And so, we're really well equipped to really make some headways. I myself, a little bit more about my background. I'm from California. I graduated from UC Berkeley, and then I also started my career in traditional finance. I used to be a licensed stockbroker with Morgan Stanley, and then I took a pretty big U-turn in my life. I played poker for a living for 6-7 years full time. Maybe I could share my screen here. Let me see. Can I share my screen? Yeah, I can share my screen. Just let me give this a test. Oops. Let me see if this is working. Is it working?
Yeah.
Oh, shit. Okay, that's my kids. Okay. So I just give you insight on me. I just I have 2 hours to share with you. This is I hate to toot my horn, but this is me because I played poker for a living again for 6-7 years full time, and like a lot of other poker players, we all came into crypto had early familiarity, largely to do with friction of the banking system. Back in 2011, basically the U.S. government more or less banned online poker in 2011, and as a result, a lot a lot of poker players actually got early familiarity with Bitcoin because of that. So a lot of these small poker sites were already accepting Bitcoin as a way to get money into those platforms. And so, yeah, this is just kind of intro on myself. This is what I did, and then, oops, stop sharing. Okay. Oops. Okay. All right. And yeah, I've been working in the crypto space since now 2017. I joined CoinFlex 2019 early on with the team, and so yeah, we've definitely come a long way. Okay, so CoinFlex, we started off 2019 as the first physically delivered futures exchange. If you're familiar with in traditional finance, actually most futures is physically delivered. We're talking about oil, gas, gold, etc. Most is actually physically delivered for a lot of different reasons, but primarily at the end of a futures contract, you get what you get. It eliminates market manipulation and also enables a lot of products to be built on top of that. Not with physical futures, you don't necessarily have to hold it to the end of the delivery, but people can trade in and out. And so our purpose was to bring physical futures to crypto. Now, that when we first started, a lot of the trading groups and people we interact with, they were really still focused on perpetual swaps, right? Perpetual swaps, innovated by BitMEX and then copied by most crypto exchanges, still became the most popular form of derivatives trading. And really great innovation, and perpetual swaps should be actually find themselves in traditional finance. Actually, it's such a great product. So we had a lot of people, again, pushing us to why not can we have maybe a deliverable perpetual swap? And at first it seemed kind of crazy because the whole idea of a perpetual swap is that it's held in, it could be held in perpetuity, not delivered, right? So, so we had a lot of thoughts and iterations around this, where we found that the missing piece to actually be able to have a deliverable perpetual swap was actually creating a repo market, right? So I'll get into repo in the next slide, but having a repo market enabled, because repo is a spread between spot and perpetual swap, and having a repo market enabled us to be able to have a deliverable perpetual swap. So we have, I said we have superior perpetual swaps to other competing exchanges, where someone could have an open perpetual swap position on CoinFlex, and at the top of the hour, say they have a 5x leverage position, say in ETH, and if they wanted to convert that to a spot position, they just need to put in the necessary USDC, and they could actually convert that to spot, right? Which is hands down like the best perpetual swap in our market, no doubt about it. Having that functionality, right? But that's made possible by having a repo market. All right, so CoinFlex is creating yield products that directly connect borrowers and lenders. What does that mean? So in the crypto space, right, you have the Binances, OKX, 4B, Bybits, these other derivative exchanges that are, I say, more focused on takers and speculators, and you have those exchanges on one end. And on the other end, you have the other, I would call NIM businesses, net interest margin businesses, like BlockFi, Celsius, et cetera. Like you name, where basically they operate more like a bank, where they're trying to borrow for cheap and then lend out for more, and they're getting the middle, right? On CoinFlex, we've created a market where borrowers and lenders can interact directly, right? And where it's real market forces kind of come apart. So this is our objective in again, directly connecting borrowers and lenders. As I said, repo. So what exactly is repo, right? Traditional repo this is really quite big. It trades 2 to 4 trillion a day in traditional finance space, but usually limited to asset managers, big institutions, and even the Federal Reserve. Typically, what happens is, these institutions, if they're looking to borrow dollars, they may repo out some of their holdings like equities and things of that nature to get dollars. And this is usually just the overnight borrow lend market. And we felt that this would be really quite applicable to crypto in that, there's always a need for dollars, and such. We created a tradable repo market where, say, if you wanted to stay long in your Bitcoin or stay long in your Ethereum, et cetera, and you want to borrow dollars, you can repo it out and get dollars and then come back to what your original underlying holding. And so this was, again, the missing link in terms of us, because repo is, again, a spread between spot and perp. And so there's a missing link in us being able to have a deliverable perpetual swap, which is, again, very, very neat. Okay. So next, by having a repo market, we had a lot of lenders trading our repo order books. They're lending their dollars and then getting a yield, but it's very, very cumbersome to follow this. There's we have so many different pairs within our repo order books, and so we had quite a demand from different firms asking us to tokenize some of the actions that they were in fact doing. And so this iterated to the creation of Flex USD, right? So Flex USD is our native exchange coin, right? Let me share my screen. 1 second. Okay. So, okay. Can you guys see that? Oops. How do I increase it? Okay, they can see. Sorry about that. So, as you can see, Flex USD, we currently have about 371 million in circulation. In about a year, we've paid over 10 million in interest from Flex USD. You see the 7-day APY, 13%. So we've had quite a big base in terms of Flex USD. It's very easy to get started. If you go on coinflex.com, and then you see, click on Flex USD, and you just need to have some USDC readily available to convert to Flex USD. And it's a one-to-one mint and redeem with USDC, and it pays interest every 8 hours at the base layer just by having it. So it's you could keep it on CoinFlex to trade with as collateral, and while you're trading on CoinFlex, your underlying collateral will be earning yield. You could deploy it into a handful of different decentralized exchanges for yield farming and use it as collateral. And you could also deploy in our AMM Plus, which I'll get to later, as collateral, and also get that effect of yield on yield. So a double yield opportunity where your collateral is working and then your trading activity is also working. I'm not sure if you guys could see this. Okay. Wait, yeah, if you go to the transparency page on CoinFlex, you can see quite powerful. Every 8 hours, and you see the paid interest, right? And you can go back in time. You see the timestamps every 8 hours. I'd say from mid-year, like August to November, this has generally been closer to 15% APR, generally, like give or take. It's a variable rate though, so the whole concept, right, is we by creating a repo market, the people that are selling repo, those people are some of the leveraged longs on CoinFlex, or the ones borrowing dollars on CoinFlex, or doing some arbitrage off of CoinFlex. And then the Flex USD holders, they're deploying liquidity into our repo markets, and they're lending out dollars, right? So the opposite. So the Flex USD holders are buy repo, and whereas the people borrowing are sell repo. And this yield is a variable rate based on demand. And you see there's just a constant demand for dollars in our space. So again, just by having it, you get this interest, right? I mean, I'll share with you even my personal stuff, and then you could see, every 8 hours, I'm getting paid interest just by having it, right? So this is really quite powerful, right? Okay, let me go back. Okay, sorry. Sorry. Okay. Yeah, so yeah, one-to-one, everything is on the blockchain. You could see, and even in cold storage, you will get the interest payments. You just you won't see it like kind of what I have on CoinFlex, where you see one by one, but you'll see your balance increasing even in cold storage, again, every 8 hours. Okay. And lastly, I want to get to our AMM Plus model, right? So about late May, we were the first CeFi exchange to incorporate an AMM Plus model within our exchange. So, I say 1 to 2 years ago, CoinFlex, we used to spend a lot of money on professional market makers providing liquidity to CoinFlex. This is very typical of any crypto exchange, to enlist and hire market makers to provide liquidity, but the problem with hiring, I say, professional market makers is that, they typically get paid like a monthly stipend. They get paid 5, 10, 15, 20K, 50K US a month to provide liquidity on X amount of pairs. But the alignment is not always necessarily there. They, especially in the busier times when markets like very violent, like crashing down, they'll generally want to turn off the liquidity because they don't necessarily want directional risk, because they get paid regardless, right? And so learning from that lack of alignment, and then seeing like the things happening in DeFi in terms of everyday people being able to AMM, especially with advent of Uniswap, 2018, people were starting to AMM and then get yield by deploying capital, right? We learned that this could be possible also in a CeFi format, right? So there's really a lot of key differences between DeFi and CeFi in terms of an AMM context. So in DeFi, if you're on Uniswap, you typically need 1-to-1 of the assets that the pair that you're market making on. Example, if it's like ETH USD on Uniswap, you'll need 1-to-1 of ETH and USDC, right? On CoinFlex, the key advantage with us is because we're a single currency cross collateral system, you can actually use any coin that we support. There's 20 plus coins that we support. You could use Doge to make markets in ETH USD. You can use Link to make markets in BCH. You could use, again, any coin that we support and then deploy into our AMM as collateral and quote two-sided. So it's quite a brilliant thing, because someone may have some idle coins, like Dots or Link or Aave, whatever it is, and it's just not earning yield for them, and they could deploy it in our AMMs and get some yield. In the DeFi realm, you're typically trading against a pool, right? So for instance, if I deploy capital into a DeFi AMM, I put my capital in, and then I get an LP token, which represents my proportion of what's in that pool, and then I could then redeem my LP token and basically get out. On CoinFlex, it's different. Everyone that AMMs within CoinFlex, they're have their own individual P&L, no different than they're just doing their own trading. And all those orders are integrated with our central limit order book. So it's right into the CoinFlex order books, right? Now, also in terms of capital efficiency, there's a massive difference. To give you perspective, on Uniswap, there is about 8 billion TVL in Uniswap, and it trades the most amongst all the dexes. It trades about, at the moment, like 1 to 2 billion a day, right? Now on CoinFlex, let me see. Let me share my screen again. 1 second. On CoinFlex, we have about 100, let's say between 100 to 120 million TVL typically in our AMMs more recently. And we trade anywhere between maybe 200 million to 1.5 billion on a busier day through the AMMs, right? So, that's a multiple, like where our TVL again is like say 110 million, whatever, and then we say we trade up to that 1 billion mark. That's almost like 10 times, right, of what's in the AMMs. And then you see the in-range APRs. So, these are mostly unleveraged, 40, 18, 70, I'll share with you my personal PA, and then you'll see that definitely like a really big difference between obviously leveraged and unleveraged, right? Let me go back to, okay. So I'll share with you a little bit in terms of ones I've done in the past, just to kind of go through. But you see, like on a 10x lever, like obviously this is like, so in our AMMs you can go up to 0 to 10x. Right, 10x is obviously more risky, or you could do something like 5x, right, where you get something. You'll see definitely the more leveraged ones using than obviously the higher APRs. Not recommending using like I'm just kind of pointing out the difference. Like this was one of my most successful ones right here, 10x leverage, and then this is only like actually like a 3-day period, and I used 400 flex as collateral, and it traded 76. I got 76 flex in reward and $61 over like a 3-day period, right? So this is obviously more aggressive. I'd say something more closer to like a 3 to 5x is more reasonable. And you'll see, easily like, triple digit. If one's actually incorporating leverage, then it's not hard to actually get some triple digit APRs, right? Okay, let me go back. Sorry. Okay. And then, not to mention, in terms of CeFi, DeFi. In DeFi, obviously, there's limitations in terms of gas fees. Trades just happen slower, right? And then also the taker fees within DeFi are also higher. So on a Uniswap, we're talking purely spot markets, right? It's not derivatives, spot markets. So taker fees are 0.3, 30 basis points. whereas on CoinFlex, the taker fees range from 4 basis points to 8. So there's just so much more trading when you're talking about when on the maker side in the AMMs, up to 10 times leverage, but on the taker side, someone could be using up to 100 times leverage. So there's just so much more trading happening, which then ultimately people get more yield, right? And then another thing is, it's not shown here, but a very important concept, miner extractable value, MEV. So in DeFi, there's quite a lot of front running, like because miners are the last gatekeeper of basically transactions, right? And so if they know like a big order is coming, they may trade against it and front run, or they may tip off like a trading firm and then they'll trade against it. It's quite problematic. So I think that's a really key advantage of actually a CeFi AMM is that doesn't exist with us, where the idea of like a miner gatekeeping that key data and information, right, and trading against it. It's very problematic. Okay, so giving everyone opportunity to be a market maker, right? Okay, so where are these yields coming from, right? I showed you some on a transparency page, like where the APRs are generally 50 to 100%, but that's mostly unleveraged. And then I showed you kind of my personal stuff where if you use some leverage, triple digit is actually not out of the possibilities. Where's that coming from? So anyone that deploys capital into our AMM Plus, we automatically put them on our highest VIP level 6 for makers. So every single trade, they get 3 basis point maker rebate every time trade happens. Now, the whole idea of AMM, automated market maker, right, is that these are bots working for you, on your behalf. And what happens is when you deploy a set of orders, it'll say one of your orders gets taken, you'll put a corresponding order above or below it, and then you're either buying lower, selling higher, or opposite. And in the case of a set of trades, a round trip scalp, someone will be making 8 basis points between a set of trades. 3 rebate on one side, 3 rebate on the side, and then there'll be a scalp in between. In total, 9 basis points. This is what I'm basically describing, right? So you see this is like a real history. I've color coded this where these are a set of trades. And so you see 4205, and the bot, what happens is when that order is taken, I was able to get some flex as my maker rebate. The rebates come in our native exchange coin Flex coin, which I'll get further into later. But you see 4205, and then it's sold at 4205.2, 2 tick sizes above, right? So between, say I'm looking at the blue one, that's 8 basis points just between a set of that set of trades. And if I keep doing that over and over and over again, that's where this yield is coming from. Right, you see the red one, 4204, 4204.2, right? Same thing. And then the yellow one, 4203.5, and then 4203.7. Just two tick sizes above, right? Let me get into sorry. Okay. So, oops. Okay. So again, I'm going to AMM Plus right here, right? And then to begin, you're going to see a lot of different parameters, right? One could set leveraged, unleveraged, right? So again, you can use up to 10 times leverage in our system. And then unleveraged. So unleveraged on CoinFlex, it actually simulates what you'd be doing on a spot AMM, like a Uniswap. Like if I was doing the unleveraged and then neutral, let's say it's the Bitcoin pair, I would need some Bitcoin and I need some USDC. So this is more resembling what you would typically do on a Uniswap. You need one of this. If I'm doing unleveraged, right? This unleveraged. Buy only, unleveraged, I need some USDC to buy. Sell only, I need some Bitcoin, right? To sell. Now, if I'm doing leverage, which is, I mean, infinitely more interesting. And then again, direction. So let me touch on, this really depends on our view of the market, buy, sell, or neutral, right? And I'll get into each of these and why this is important. But again, this depends on our view of the market as a whole, right? And then, okay, so say if I want to do, we could do example right now, like we'll do a buy only on ETH, and I'll do like a 5x leverage, okay? I'll do one just for fun, just to, and then, as I was saying earlier, you can use Flex USD as collateral, right? So, you know, Flex USD, again, it's generally been yielding 10-20% APR as a base collateral, and I could deploy it into AMMs where I'm getting yield on top of that. So like a yield on yield opportunity, right? And then you just need to test our AMMs, you just need $200 equivalent to test. So say I use 200 Flex USD. Okay. And then I'm going to deploy this, right? So ETH is trading at 3,700 right now, right? I'm going to do something slightly more aggressive just to kind of show, oops, let's do like a very clear 3,600 to 38. So this is more aggressive, right? This is a $200 range, but I just want to show you guys how much it can trade actually for, and the wider the range we do, the more passive this is, and the less leverage we use, or unleveraged, and also more passive. And certainly, oppositely, if we used higher leverage and a tighter range, then it is more active, right? And so let me show you. Let's do two examples. One, I'll do something more aggressive, and then something more passive. All right, so this would be something more active, right? Let's say 5x leverage. Well, we can do, because it's an example, we do more leverage, okay? And then Flex USD, and then we do, there's a $200 range, and then I'm gonna begin AMM plus. Success, right? And then I'm gonna see this in right here, and you see this is the range I've set. This is my collateral, 200 Flex USD. And then let's go more details. And I've done a buy only. So you see all my initial orders are bids, are buys. And you see I set my range 3,600 to 3,800. You see all my orders kind of within that range. And it might have traded already. Yeah, not yet, but we'll circle back to that, right? So this is what I've done there. So this is one example of a buy only. And then I could do one that's maybe a little bit more passive, right? So let's say, let's do the Bitcoin pair this time. Okay, and then I'm going to use leverage as well, but I'm going to use like 1x leverage. I'm going to use Flex USD as collateral, $200. And I'm going to do something more passive, right? So Bitcoin's trading right here. I'm going to go, if I do something like this, this is way more passive. And you see the liquidation price down here. See on a 1x leverage, I mean, this is like not necessarily, I mean, this is very, very much down there, right? I mean, okay, let me, if I do like 5x, you'll see my liquidation price increase, you know, Now this is more possible, right? 5x is and then let's say 10x. Okay, this is very much more possible, although still down there. But for this purpose, I'm just gonna do like a simple, let's do a 2x, right? And then my liquidation price is still very much far down there. You know, I'm not too overly concerned about that, but look, this range is really wide, right? So what this means is I'm only willing to buy within this range, 39,963 and this, right? Let me, this one up again as well. Okay, and then we'll see that sitting there, right? So this is, again, this one's way more passive. This is a 2x leverage. This is like a 7x, right? And we can come back to that. Let me go back to, right? Okay, and then this one? Yeah, okay. Cool. Okay, sorry.
It's okay.
Okay. Okay, so let me go over what's actually the difference between buy only, sell only, and neutral, right? So in a buy only AMM, I am only long only, and I'm never short, right? If say in this case, if I'm doing buy only and I'm doing the Ethereum pair, so I set my range from 4,000 to 4,500 as I've highlighted here. If, you know, the ideal scenario is, you know, we trade between 4,000 and 4,500 for, you know, as long as possible. You know, I'm just collecting a lot of yield. You know, I get 3 basis points in flex every single time a trade happens. So I would love for it to be in range and just trading and trading and trading, and I'm collecting yield. And then, you know, the ideal scenario is that I collect all this yield, right? And then, you know, then it goes through the upper band. If I'm doing a buy only, it goes to say 4,550 or 4,600, whatever. In this scenario, you know, I've collected all this yield, and then I have now a 0 position. I'm flat. I'm no longer have any exposure to anything else. I'm not in a position. This is actually our goal, to collect yield and then get out, right? And oppositely, if in fact the price, we do buy only and the price goes down, so say it goes down to you know, 3,900 or whatever. In this case, say if we did like a 7x leverage, we've fully deployed all our leverage, and we no longer have ability to buy anymore. We've already used all our ammunition, our bullets, right? So we're buy only, but we're not really trying to accumulate a position. Accumulating a position is more like a worst case scenario in a buy only AMM. Yeah. Now, the neat thing about CoinFlex, again, because of our deliverable perpetual swaps, say you know, we did buy only. This example, 4,000, 4,500, and the price does go down to 3,900. You know, we can decide to convert our leverage long position, say, you know, 7x leverage, 7x long. We can convert that into a spot ETH at every top of the hour. Every hour you can deliver to spot. You just need to put in the USDC to cover it, and then you can convert it to spot. It's an awesome plan B in the event that you're doing a buy only, and then it goes through the bottom band, and you don't say the liquidation price in this case is like 3,000. You're worried about that. You don't want to get liquidated. You can actually just convert it all to spot. So it's really quite tactical and smart to kind of approach it in this kind of way. But yeah, again, the goal is to collect all the yield in between while it's in range, and then get out and say it goes above the upper band. A sell only AMM, exact opposite of what I described in the buy only. You're only short. You're never long. So all your initial orders are sell orders, and then exact opposite in terms of, so in this case, where the BCH range that I've set 570 to 670. Again, same thing. We hope that it stays in range and we're collecting yield. Say if it goes through the upper band in this case, like goes to 680, we've already deployed. You know, we're maximum short position. We no longer can sell. We're max. And if we go through the bottom of the range, then we have no position. And this would be ideal. We're bearish about the market. You know, it trades in a range and then it goes to 560. In this situation, we're happy. We collected a lot of yield, and now we have no position. Right. And then the last one, neutral. So neutral is it's the hardest one to really master. So neutral is centered around a midpoint. So as an example, if my range in Bitcoin, in this case, my example, 60,000 to 70,000. So my midpoint would be 65,000. So from the midpoint to the top of my upper band, I'm selling, right? And then from the midpoint to the bottom band, I'm buying, bidding, right? And this is the toughest, because if you stray from the midpoint at all, there is some impermanent loss, which is atypical of AMMs, where we're unrealized loss, right? It's not realized yet, right? And so you need to be incredibly accurate in terms of that midpoint, but it does, neutral trades the most easily, because it's just you're doing both actions, buying and selling, right? And in the event that you use neutral, there's also two liquidation price risks on both on the low end, extreme move down and extreme move up. So again, you would want to be pretty accurate, but it definitely trades the most. So if someone's really just generally very cognizant of kind of where prices are ranging, especially in the range bound channel, neutral is like is the way to go. So again, with our AMM Plus, the winning strategy is to be in range. You're only collecting maker rebates and scalping when you're in range. The price is within the range you set. Certainly, the tighter the range you set, the more likely you're going to be out of the range. But the more passive, then you're more likely to be in it. And really, the best case scenarios is to say if it's buy only, exit when through you collect a bunch of yield through the top band, sell only, collect a bunch of yield through the bottom band, and then neutral, exit when you're close to the midpoint after collecting some yield. Okay. Now, what I mentioned too is that the rebates are distributed. You get them in Flex Coin. So Flex Coin is let's say our native exchange coin, say BNB equivalent, really centered around our exchange in terms of both the rebate and taker side. So anyone taking on CoinFlex, they get significantly cheaper fees by using Flex. Let me pull up. Let's see. Okay, so Flex has had a quite a run up. I think this is the exciting part of our AMMs, right? Because, oops. Okay. So, CoinFlex. We've had some crazy growth in the last 6 months. Like right around July, August, Flex was trading at 20 cents, and now you see closer to $6, right? So, like the benefit of AMMing on CoinFlex, you're getting Flex as your reward. And what we found is that generally the AMMs on CoinFlex, when they get Flex, they tend to not sell as much. I mean, this is more like supply and demand thing. They tend to, after they earn the reward, they're quite grateful and they're actually holding. So we and then just all the positive developments within CoinFlex, with again FlexUSD, AMM Plus, and then I'll get to a couple other partnerships that we've struck. But it's been huge in terms of the flex price. So this is quite an opportunity for anyone AMMing. You'll get Flex Coin as your base reward, right? Which also affects your ultimate APR. We're quite established exchange. It's not like getting some tiny airdrop coin that might be worthless or rugged or whatnot. So quite an opportunity. You could use that as collateral to trade on CoinFlex, and then Flex Burn. I'll get to the next slide. So Flex DAO. So CoinFlex, we're the first to actually have the first CeFi exchange to have a DAO, kind of model after the Curve model. This launched just maybe about 10 days ago, actually. But in terms of buy and burn and ultimately paying a staking reward to anyone staking their Flex in the DAO, this is awesome. Anyone that has Flex can stake into our DAO anywhere between 2 weeks to 4 years. And then depending on how long they stake the Flex, then it weighs in on how much reward they get. But longer term, this is huge in terms of getting the community more involved in CoinFlex. So I'm not sure if you guys are familiar with DAOs in general. DAO means decentralized automated organization. But the whole idea is we especially decisions that are more community, that can be more community based, that we feel that our users should have a bigger voice in. This is just a great way for them to be more involved in CoinFlex, because we believe even as decision makers in CoinFlex, some of our community are better equipped to actually make a lot of those decisions because you guys are the users, right? So this is first of its kind within the CeFi realm. It just launched 10 days ago. And at the moment, there's about 5% of the supply staked. We anticipate this to be greater and greater as more people get familiar with what it is. Yeah. So, full ecosystem, right? Like I said, we started with physical features, which enabled us to build interest rate products above this features layers. This evolved to having the first crypto repo market. This is a really huge innovation because and I say no other exchange is really doing both combination of physical features and repo. It's really quite hard to copy. It might take at least 1 year to 2 years to actually copy this model. It's not easy, and that iterated again to FlexUSD, which our goal actually is to be the biggest stablecoin in the world. By actually building up FlexUSD to a point where right now there's 370 plus million in FlexUSD, but say if there's 10-20 billion plus in FlexUSD, we would actually be bigger than Binance, okay, for etc. by having the biggest stablecoin in the world. So we're trying to be more of a full 360 money center in terms of yield, as opposed to some of the exchanges that are focused on primarily takers, and people taking high leverage and punting, and then them having to replenish that and finding more and more takers. We rather be more of like a money center where people can get yield, right? FlexUSD is awesome. I mean, if you can get again 10-20% APR variable rate, but on a stable coin that has no directional or delta risk, then it's a no-brainer, right? So That is our objective. These are some key figures, right? Let's see, exchange volume. I mean, this is inclusive of repo. So I'll say in outright trading, we've been anywhere between 200 million to 1.5 billion more recently in outright trading. But repo, since inception, we've traded over 300 billion plus, quite huge. Average daily open interest is 350 million. Again, if we get Flex USD to 10, 20 million billion plus, our open interest will follow because we will have the cheapest perp rates in the world. And this is just it will basically stack like more like all tides rise, where having cheaper perp rates, more people will trade on CoinFlex, and by more people trading and having open position on CoinFlex, the yields on Flex USD will keep rising as well. So it's kind of up on both sides. And then at the moment, total value in our AMM Plus, there's about 110 million. We also see that if we get that to a point where there's 200, 300, 500 million plus, the liquidity on CoinFlex will become so good, because the thing about AMMs is that these orders don't disappear. So again, the most violent market moves, professional market makers, they'll turn off their liquidity. They don't want the directional risk. But the AMMs, those orders are there by demand, and they sit there on the order book. And so CoinFlex, we tend to do the best in the most violent up or down markets where our liquidity doesn't disappear. It's there. So we've created, I'd say, a rare win-win-win where the AMMs are happy because they're getting the yield, they're getting 3 basis points every trade. On the taker side, the hedge funds, HFTs, people trading, they're happy because liquidity is so good. And then obviously we're happy because we're facilitating all of that, and there's a buoyant market between, right? So it's a rare win-win-win. Flex USD, again, we paid over 10 million in interest thus far. So where CoinFlex is making money is on the interest payments for Flex USD. 90% goes to the end user, and then CoinFlex gets 10%. Now you can get 100% of that actually by trading our repo markets. You could buy repo and do this yourself in our repo markets and get the full 100%. But again, it's very cumbersome. Why not? I think the beauty of this, we've enabled everyday people, extremely passive capital, like say those family office types that they don't want directional risk of Bitcoin and ETH or derivatives, but they want the yield. They understand borrow, lend, and repo. That's where Flex USD is so powerful, right? Because it's so easily understood. You just getting yield from the leveraged longs on CoinFlex and the dollar demand on CoinFlex. This will be surprising. So our users, we have 20,000 registered users. We're about 20,000 now on CoinFlex. We're very hardcore niche user base. Our users love us because we're very responsive and active. We have a Telegram group. Our CEO is reachable every day nonstop, right? So we're extremely active, and on a user base of 20,000 users, we have traded again 1 billion plus on some days, right? So, which is incredible. But in terms of growth, let me describe where we have incredible opportunity ahead of us, right? So 2 months ago, we made it was quite a huge news. CoinFlex partners with Copper, right? Copper is a top, 1 or 2 custodian in the crypto space. They have 300 plus institutional clients. And by partnering with Copper, and whereby they've enabled their institutional users to mint Flex USD through their clear loop solution. That's really huge for us because I mean, one, they've already basically said that FlexUSD is institutional level product. It's you know, it's good enough to enable their clients to have. But from our perspective, we're actually getting a lot of inbound flow from this copper relationship. A lot of the copper existing clients, they end up registering CoinFlex and then they find us, you know, and it's been really quite good. So this has been really awesome. And certainly we're looking for more and more of these type of partnerships. We're speaking to a lot of different you know, spot exchanges or trading firms or anyone with a treasury with stable coins that is not yielding anything. That's really easy for us because if they're holding USDT or USDC and they're not getting anything, why not have FlexUSD and earn, again, that variable rate of 10, 20%, et cetera, right? So this is huge. Copper was quite a big news a couple of months ago. And then about a month ago, we made this news, CoinFlex and Bitcoin.com, right? Reached a $30 million deal too. So this is really, really huge for us. So Roger Ver, he's an investor in CoinFlex, and he's also, you know, founder of Bitcoin.com, right? And the thing with Bitcoin.com, you know, you Google search Bitcoin, it shows up on the first page, you know, when you search Bitcoin. And a lot of people that go to Bitcoin.com, you know, they find themselves there, they download the wallet, and they might buy their first crypto. But then beyond that, they don't do much else. And so they're kind of the exact opposite of CoinFlex, where, you know, we have a small user base and they get in some funds, and then they end up doing a lot more. So it's like exact inverse opposite. And so this was the context of the partnership, is that, man, you know, there's so much that Bitcoin.com could expand on, right? And so this partnership, basically what it is, let me share my screen again. So when you go, when you go to Bitcoin.com now, and then you click on exchange, this is all CoinFlex, AMM Plus, FlexUSD. This is all CoinFlex, same thing. See, same thing: mint, redeem, borrow, and then the order books, all CoinFlex. This is huge. The AMM Plus and FlexUSD in especially I believe on mobile, that will be active come, I think, in a few weeks from now. But you get the idea. This is absolutely huge because, as I described, you know, we only have 20,000 users, like let's say today, right? And Bitcoin.com has 25 million plus wallets. I mean, even like a small conversion of X%, you can see that could dramatically affect our bottom line in terms of more users, more flow, more people in FlexUSD, more people AMMing, more people buying FlexCoin, everything. This is absolutely huge for CoinFlex. All right. Okay. Sorry. Okay. Yeah. Okay. So as I said, that user growth passes, you know, 19,000, 20,000. I mean, we're going to have more users. I mean, I'm very confident of that. That number is going to skyrocket, and hence the opportunity in anything CoinFlex related, especially FlexCoin. So when we announced this partnership, obviously FlexCoin, you know, flew quite a bit, and naturally that's going to be the case because we've been generally under the radar, and a lot of people don't know who we are, and this is really quite huge. Oops. Let me share some more. Another thing I'm really proud of. So this is more from my realm. Doug Polk. So this is also in terms of user acquisition and like just really expanding our wings, right? So again, having a small user base and with the ambition of growing much bigger. So Doug Polk, if you don't know him, he, poker player, absolute legend. I made a living playing poker for a living. I can say I myself was, I was one of the top 1% that made a living from poker. I played 6-7 years full time. I was able to do it, but I have nothing compared to like Doug Polk is like top 1% of 1%. Like he was the best heads-up player of his generation. He played tournaments casually. He turned like 100K World Series of Poker buy-in. He won 3.7 million. He won 3 World Series of Poker bracelets. And that's not even his core niche. But in addition to that, he's a content creator, and a really respected one at that, because he was actually that good as a player himself. And so, he's our brand ambassador. He just did a podcast with Dan Bilzerian just yesterday. Actually, this is like 10 hours ago. I say the reason why I want to highlight this is just, CoinFlex is where our objective is really to get more known and get more people into Flex USD, AMM Plus, everything. So this is a big part of our growth plans. Couple other items I wanted to mention. We do actually plan to launch. So we're based in Hong Kong. We're Seychelles registered. We're, offshore exchange. We have people in Hong Kong. And also like London and other places. But we plan to do CoinFlex US. We want to launch CoinFlex US sometime in Q1. And we'll do it legally and compliantly potentially through Prime Trust. But CoinFlex US will be focused on basically onboarding people into Flex USD. So like it will be a fiat gateway for people to get into CoinFlex, deposit their dollars and then mint Flex USD, and also spot markets. So this is a pretty huge undertaking for us in terms of, again, we want to be the biggest stablecoin in the world. The US has most of the flow. CoinFlex US, the really huge potential for Flex USD. So this will happen in Q1, right? And then I say a little bit within also the same time period, we're looking to have a CoinFlex debit card, right? Now, a lot of the other existing crypto exchange credit cards, when you spend money, when you use their card, you actually sell your crypto. So say you have 1 Bitcoin and then you use like a competing exchange's debit card, you're actually spending crypto. Whereas because CoinFlex has a repo market, right? You can spend on your card, CoinFlex card, and keep your crypto. You would just sell repo. You use your coin, and then you're borrowing dollars, and then at a cheaper rate than actually existing credit cards, where you can just pay accordingly. So you don't actually have to sell your crypto. This is quite could be huge in terms of our development expansion. So this part we're really excited about, and this is only made possible because, again, we have a repo market, right? So yeah, this is appreciate everyone letting me kind of share everything about CoinFlex, about myself, and let's see, we can kind of circle back to what let me see if there's any trades. Because I wanted to go back to kind of what I opened. Okay. Ooh, okay. So on the 7x leverage, we already, we traded on $200. We traded already like 35 times, right? Ooh. And this this Bitcoin one traded a little bit, but again, this one's a lot more passive. This is 2x. My internet is kind of slow. Apologies. Yeah. Any case, woo. Yeah, any case, you guys get the idea is that the AMM is really quite like a fun tool in terms of you can be extremely active or extremely passive, right? It's another way to kind of capture some yield, and you get flex coin when you AMM, which is quite an opportunity as I described. So yeah, I think the best way for people to get more involved with CoinFlex, what I would recommend is obviously register account and then deposit some USDC or deposit some other crypto and convert to USDC, like deposit Bitcoin, sell it for USDC, and then mint some Flex USD. You could take $10 and just mint it and then see how it interacts. Again, every 8 hours you get paid interest. Yeah, play around with it. The AMM, you can use $200, like what I did, just see how it works. May or may not be work, for you, but I think, yeah, give it a try, and that's the best way to learn more about CoinFlex, and then yeah, and then long flex coin. Thanks, guys.
Okay, thank you, Kenny's inspirational presentation. So I have okay, do you need a water break?
Oh, no, it's okay.
Okay. So I have a few questions for Kenny, as Kenny described the Flex USD and Flex Coin, and also the Conflex so attractive. So I want to ask, how is Conflex differ from other competitor exchange platforms, such as I know, like Binance, there's outside there's lots of large platforms. So how can Conflex competing against them?
Sure. Yeah, like I described, a lot of these big exchanges that exist, like a Binance, OK, Huobi, Bybit, FTX, etc. I think they're more focused on getting takers and people looking to use high leverage or interested in excuse my language, shit coins or altcoins, and then these people, they use high leverage, they blow out, and then they have to keep replenishing those users, almost like a casino. I say in our case with CoinFlex, we're trying to be more of a rounded money center. Flex USD is such an easy conversation for us with, again, family office, institutions. They love it because it's makes sense, borrow, lend, and repo, right? These things make sense for typical family office types.
Okay. So I was quite interested to know how Flex USD able to pay such consistent yield as the DeFi environment, the ecosystem keep growing. Actually, some of the people mentioned that they think the yield farming profit is growing less and less, but
Sure.
How can Conflex still keeping so stable?
Yeah.
I
mean, it's a function of dollar demand. As I said, on CoinFlex, the leverage longs, and also those firms that are doing arbitrage, say say the funding is larger on like Binance or wherever. Some of these arbitrage, like these firms, they may take the dollars on the platform and then do the arb and then come back. So there's always a demand for dollars on CoinFlex, and then that's where the yield is coming from, because they're paying the Flex USD holders. Yeah.
Okay. So given the focus on the yield, so how is Conflex different from maybe BlockFi, Celsius, or other lending borrowing platform in the crypto space?
Yeah. So as I said, a lot of these like middleman type of companies, like what you described, like BlockFi, Celsius, etc. They're a net interest margin business. They operate like a bank. They're trying to borrow very cheaply and then lend out for more. And they're usually lending out to trading firms, actually, right? And so as a result, they're taking this middle, this NIM, right? And the thing is about them is they have to constantly demand their balance their left hand and right hand. Like they can't all of a sudden if someone wants to redeem, take out $1 billion, they actually will not be able to do it because there's a mismatch in the balance, right? So that's the beauty of CoinFlex and the CoinFlex's repo market is that we are connecting the borrower and lender directly. They're interacting directly, and it's not a NIM basically, right? And so, yeah, that's easily the biggest difference between CoinFlex and some of these type of businesses.
Okay, audience. So we'll now have a 2 minutes break. So we have to set up the venue, and we are very lucky to have another special guest to join us in this Q&A sections and networking sections together with Kenny. So like grab the time to have a water break, and we'll have a further Q&A and networking panel section after 2 minutes break. So see you later.
Thanks, guys.
Hello, audience. We are back. So let me introduce our special guest here. So we have Ray Wong, the founder of Asymmetry Capital and LuTech with us today. So Ray is an investor in early stage blockchain projects, mainly in blockchain games and decentralized finance. He is also the CEO of LuTech, an award-winning Bitcoin mining company that provides service to funds, professional investors, and the energy industry. So Ray is also a VC advisor in blockchain and sustainability projects. So besides his investment backgrounds, Ray is also a former executive in a publicly listed environmental firm and also worked at Morgan Stanley and Credit Suisse. He's an active speaker in different conferences. So what about let Ray also introduce himself and maybe talk about some backgrounds of his companies and what the projects they were.
Sure. Yes. Yes. So I'm from traditional banking background, so I understand quite a bit from a centralized finance field. But I think nowadays, blockchain allows opportunity for us to get involved in a more decentralized finance world that challenges but also complements on the traditional finance side. For myself, I participate mainly as a founder investor on the decentralized finance space. Also, like very passionate about the GameFi space that a lot of people talk about, and I'm happy to share about what kind of trends and also developments in the space, because it's always very fast moving in the industry. So the trends actually changed a couple of times this year already, but let's look forward to 2022.
Yeah. Okay, so I already saw some audience drop some questions here, but before answering these questions, I would like to ask one question that I'm quite interested about. Any thoughts or comments about the Hong Kong government? Will it be gonna launch the CBDC or any like comments on this?
So for me, even if the projects I'm involved in or the investments, they're not really Hong Kong. The target market is not really Hong Kong. I think there are regulated exchanges, I think in Hong Kong, like OSL, that allows people to get on ramp and into the like digital asset space. And then they can do a lot of things about it. So I think these two different and separate markets, I think CBDC or even a Hong Kong-based stablecoin, I think it's a completely different market.
Yeah, I think for us, having, we're physically in Hong Kong, the problem with getting just the Hong Kong regulatory licenses, it's only applicable to Hong Kong, and so it's not, you cannot use it anywhere else, right? Yeah. So it's limited in nature, although we're hopeful that certainly the Hong Kong government will loosen and be more friendly in terms of crypto and especially derivatives, right? I think derivatives, given the nature of leverage and the retail base of potentially being more dangerous, I know we definitely understand. I think from a company perspective, we are looking at other jurisdictions such as potentially like Bahamas or other places. So yeah, we're cognizant, and we do all full KYC. We follow the rules and make sure that we're not breaking them from that perspective. But yeah, we're not really targeting Hong Kong retail per se. We're here, but we're not promoting necessarily. We're more of like I guess our audience is definitely more global from all over. Yeah.
So I think this question from the audience is for Kenny. So as Kenny mentioned, conflicts are based in Hong Kong, right? And there are some exchanges that have moved out already. So will you leave and maybe impact? What are the impact for that for those who leaving?
Yeah, I mean, honestly speaking, very candidly speaking, we know so many trading firms, exchanges move to Singapore. Yes. Can name like a dozen different groups that move from Hong Kong to Singapore. But even Singapore, Binance, like CZ, he just left Singapore. So it gives you an idea. They also like Titan as well. We're cognizant. I guess our co-founders may leave Hong Kong and again be based in Bahamas or other places. Ourselves, we like myself, I may be Hong Kong and just kind of operate remotely, I guess. Yeah.
Okay, so do you think decentralized exchange will overtake centralized exchange? Yes, very common question, right?
I think it's two different markets. We're talking about, I think decentralized exchanges empowers us to customize our own assets with a lot of data and asset ownership. So it will work potentially with centralized exchanges which are with more KYC, more flow, and more regulated side of things. But I think there are a lot of underserved markets that needs kind of decentralized finance, so people have very little asset can also participate in, I think, the digital asset space.
I think they can both coexist, right? I think they're both important. I think what Ray said, decentralized finance, like DEX, people control their funds, they control their keys, and you're seeing it's getting easier and easier to use a DEX now than it was like 3 years ago or so. So this is definitely a positive development. The thing about decentralized exchanges is that they're still more limited to spot markets. So I think there's still, again, what we've kind of put together in terms of a CeFi AMM, there's definitely, distinct advantages, again, where you don't have, again, the front running with, minor extractable value, that part, and then just having, and then no gas fees on trading, right? That's really big. And then not to mention on CoinFlex now, you can actually log in with MetaMask. So you can actually control your keys and trade on CoinFlex, which is, so why can't there be a hybrid where you're controlling keys and doing what you need to do? So I think that's
cool. Okay, what are some countries that you think Hong Kong should follow in regard, especially I think in regard to the crypto regulations? Yeah, I think you did mention Singapore did well, but can you give some examples?
We've heard that like the Middle East, Dubai, Abu Dhabi, a lot of these exchanges are headed that way, including Binance. Kraken, I believe, is also in the Middle East. So a little bit more progressive. There's a lot of multinationals moving that way just because they're more open-minded and open to innovation. I think it's a shame to limit and stifle progress by having over regulation, right? It's not, regulation shouldn't be there to stop innovation.
I think there are two sides, like for the tech involvement side and also the customer acquisition part side. There are two different things. I think people can be located, the teams could be decentralized or they could be based in a certain location as well. But in terms of, I think, different exchanges, definitely the Middle East is more friendly on the jurisdiction. I think Binance got a license or some kind of access in the Middle East already. So there's some sort of regulatory arbitrage we see. So it really depends on exchange side. They have their challenges, but I think in terms of different products in the decentralized finance space, like lending, like borrowing, etc., insurance, so all things tie together to basically to challenge and also complement to the traditional finance world. Like I think some exchanges, for example, or some projects are US based and they will work with banks or people like trust companies, etc., to actually complement to the financial services. So I don't see why not, that why can't people participate in some highly regulated markets as well? For sure. Yeah.
Okay, so I have got one question that I think most people their impression to DeFi will be like, I can trade peer-to-peer or I can trade it enormously, but how important, or is it important for governance in DeFi? The governance elements in DeFi is important, or how is it important? The governance, the whole ecosystem of this.
I think we're still pretty early in the DeFi space. So I think it's evolving, right? When you get big enough, people want to get regulated. And there are, in terms of total value lock, that's measure the growth of the industry
Mhm.
in terms of the assets that are on chain of the DeFi projects. I think it's definitely growing in terms of lending. A lot of like fixed rate lending protocols and some that I invested in are actually working with traditional banks to actually help on resolving some fintech issues. And I think it's making the traditional banks or the infrastructure more efficient as well. So yeah.
I mean, yeah, in terms of governance, I think, I mean, like a Uniswap. So these dexes, they actually are able to, operate in the U.S. with no issue because they're not actually holding the funds. So this is kind of like a slight loophole in a way, right? So, yeah, no, I think very, very important. I think as we see DeFi grow bigger and bigger, the people will more want to have a say and be more involved and hold their funds.
Okay, so maybe Kenny mentioned about Uniswap. So I think our audience asked, so how do like you compare or comment on Uniswap and SushiSwap?
I like I said, I think Uniswap, it just there's again about 8 billion TVL in Uniswap, but it doesn't actually trade. It trades the most amongst all the dexes, like 1 to 2 billion a day at the moment. But it's a fraction of what's actually in there, right? So that's at least our competitive advantage. CoinFlex is that with inclusion of leverage and also single collateral, single currency cross collateral, right? It's a major difference. Not to say they're not valuable. They kind of paved the way for us to learn from and to iterate from. And so I think they'll still be continued because any project could. The beauty of these DEXs is anyone could put the project list on there, as opposed to some of these centralized exchanges. They gatekeeper of different projects listing on their exchanges, right? So.
Ray, any ideas?
Uniswap, SushiSwap. I think Uniswap and SushiSwap are relatively similar. SushiSwap started more like as a fork of Uniswap. So I think with the introduce of the token, it helps a lot on the promotion of the growth of the project. But as Kenny said, I think a lot of different decentralized exchanges, like the next development I see is probably more on the derivatives and more like the index side of things that maybe for the Uniswap kind of or user base or SushiSwap kind of user base needs to use other platforms to kind of take advantage of those opportunities.
I have a question for Ray. So no, just as fair, I think it's not even a question. I'm quite interested about. I think you joined or involved in some decentralized or the blockchain gaming projects. So can you share some like examples of interesting items you met during this project?
GameFi is, I think, very exciting. I'm personally passionate in two areas. Not just I think the games themselves empowered by play to earn. But also, I think there are a lot of values as a service providers on the games and also on the metaverse platforms in the future. And on the metaverse, especially, I want to really highlight that there will be different businesses run on them. They will be linked to cryptocurrency, etc. And a lot of the actually DeFi or finances will be happening on the metaverse platforms that could be NFT empowered or even like just DeFi projects on those that I'm personally very excited about. But in terms of games themselves, I think the new games, either interoperable game across different games with the same avatar is something excite me as well. And play to earn really challenges a lot of traditional gaming industry and the VC that promotes them to start new funds in the area. And actually my current focus is on a lot of the blockchain GameFi projects right now.
Okay, so we have questions for Kenny. Okay, why was there a decision to make a DAO while everything was going well as
Yeah.
centralized?
I think ultimately it's about inclusion of the community and making it so that the people that do hold the most Flex coin have the greater voice in decisions regarding CoinFlex, right? And so it is a positive, and not to mention to stake anywhere between 2 weeks to 4 years. 4 years is a major commitment. Think about like 4 years in crypto. And so we've made it curbed where anyone that stakes that 4 years, they get exponentially more staking rewards and more voice in CoinFlex. So no, it's very weighted in terms of voice and having an impact on these kind of decisions. Yeah.
Okay, is there any questions from the audience? Okay, so we'll wait for a bit. So we'll wait for 1 or 2 minutes. So if there's no further questions, we can move on to the networking sections. Okay,
What
what's the value of land purchase in Sandbox?
I'll quickly answer. I think on the metaverse in general, Sandbox is one of the leading metaverses. But I think there will be a lot more metaverses done by the big tech companies and also different projects. So we can see land purchases as a big hype even on a game themselves. So I think for Sandbox, we're talking about certain utility in terms of how you build. I heard there's going to be even Sandbox at the center, and Times Square is going to build a really huge building. I knew there were shopping malls and different services, or even like on those metaverses. But I think the next wave I'm interested in more is single industry metaverses, like an office on a metaverse, or like a store on a metaverse. I think it's etc. I think e-commerce and metaverse, that's something I'm more interested about, because it would get harder and harder to I can navigate in a centralized metaverse.
Yeah, I think that would be a huge potential for,
Yeah.
especially for e-commerce. Okay, so if there's no other questions, okay, it's 5:50 now. Okay, so what about we move on to the networking sections? Okay, so I will now enable the chat room functions to everyone on my audience. So if you want to have any questions or comments or feedbacks, or you want to know more about CoinFlex or the Flex USD or the blockchain gaming related topics, trends, you can ask Kenny and also Ray.
Like we actually also have ambitions within the gaming metaverse space. Like if you actually go on again on CoinFlex, if you go to our AMM Plus Arena, we have like a weekly competition where if someone wins the competition, they'll get a champion NFT. But we go through, we're kind of brainstorming at the moment in terms of how to expand in this area, because we know how critical gaming is. Yeah, it's so open-ended, and you could do so much with it that like we definitely are keenly aware and looking to expand on what we have done at least. Yeah.
Actually, what's the limitation or difficulties when talking about want to develop more in the NFT? Like, what are the difficulties or limitations?
I think there's no one NFT standard. I think that's the biggest challenge. Like land is an NFT itself, or even the weapons, the games is NFT. An avatar or like a PFP, profile picture is something. So one direction or one project that I'm interested and passionate about that I'm investing in is basically they make a 2D profile picture to be 3D to go into different metaverses and their own metaverse or game. I think that's more interesting about the something. But the biggest challenge is basically, for example, CryptoPunks, you invest, but you don't really have the ownership of the royalty if you make products out of it. But for apes, Bored Apes, you have the royalty out of the products or the collaborations between. So I think that is something that I think people need to be fully aware of when they buy an NFT.
Do you own the NFT yourself?
small ones. I don't look punk.
I'm more like passionate on NFT projects, NFT enablers,
okay.
than NFT itself.
Okay, YK says great sharing. Okay. So she or he is interest in GameFi. So what Ray and Kenny think about is future development and trend more on GameFi, especially.
I think I think there are not a lot of interesting games on the blockchain game space. A lot of them are card games, and then they're not really that playable or that interesting, but more for building a financial mechanism for like a scholarship for play to earn purpose, and for people to kind of keep on playing the games, and it helps on the tokenomics and the token side of things. But I think upcoming, with a lot of the game studios getting into the space, taking advantage of the hot market in GameFi, the fundraising craze, then I think there will be we'll see more interesting games actually being built in Hong Kong or even outside Hong Kong. I see a lot of interesting games actually popping up in Hong Kong. Yes.
Any ideas?
I mean, it's amazing that it's kind of really gone into like different countries. Like for instance, like Philippines, where like people playing play to earn games there just to make a living, right? I think it's crazy that it got to that point where that level of impact. I think it's gonna more and more interesting games will come about for sure. Like Ray said, I think it's I don't know. I'm a little bit indifferent because I used to play games for a living as a poker player. Right? I played online poker 80 to 100 hours a week. There's some play to earn poker sites, but then I don't think they're necessarily a viable model. I'm actually more skeptical on different segments of games. Poker being one of them. I think just maybe being pessimistic. I think online poker is almost dead actually because a lot of bots and different it's more or less kind of the margins have gone smaller, and it's not even worthwhile to play online poker. And so different perspective.
I think Kenny's touch on the play to earn market is very big in the Philippines as a service provider, especially during COVID. A lot of people are out of jobs, so people earn more than even the minimum wage that they previously earned, even regardless of where they do. I think very importantly, I think financial inclusion through the scholarships of this play to earn model really helps the people with good internet, but from the third world countries to actually earn a decent income out of it. So one project I work on is actually targeting Pakistan instead of Philippines, I think, which is a very crowded market, on building the guilds, which are the players. I'm targeting Pakistan and also South America and Central America right now for one of my projects to on that.
I think both also answer Jimmy's question. How will GameFi work for people that don't game? Yeah, they earn it. Okay. Okay, so Rainy, does blockchain technology affect the game experience? Does blockchain reduce the internet speed so lag in game?
I wouldn't think so, right?
I think for the games, one challenge was I think an Intel executive came out to say the internet speed or the data warehouses need to be further expanded to have a full-thrown metaverse or like really smooth blockchain games, because currently the blockchain games are kind of not super interesting. The resolutions are very low. It's not super playable compared to traditional games. So
Still like that.
I think a lot of infrastructure needs to be done in order to put us all on the cloud or on the blockchain.
Okay, Camellia Chu. Is there any potential for the widespread use of cryptocurrency as a currency?
Yeah, I think stable coins as a whole, the market is going to grow bigger, just because they're so useful. And again, with FlexUSD, if someone can earn interest on their stable coins, and then say we have like a a credit card where you're not spending your crypto. I mean, it can be used as currency from this kind of perspective. I think I'm hopeful. Certainly that in order for crypto to become bigger and more mainstream, then yes, people should be spending their cryptos.
Okay, Kevin, do you think any bubble in NFT okay? Any bubble in NFT?
I think good players do come out of I think there are a lot of talents actually getting into the space. I think New York Times have an article saying that actually a lot of people from Silicon Valley are actually fleeing big tech to go into the blockchain space, because I think there's so many job opportunities and also issues that people can deal with and tackle. And there's certainly a lot of hot money trying to get into the space in different areas. So for example, it's like just staking on a platform can get such higher yield versus when you put it in a traditional bank. So I think these are just like basic opportunities that I think a lot of people want to capture. But there are certainly some less interesting projects that will be washed out.
I think regarding NFTs, I'm definitely more on the skeptical end. I say they tend to be more less liquid. There's less trading, and so you see so many of these smaller NFT projects, and they're really just low liquidity and trying to find someone to buy higher. No different than your typical collectibles, baseball cards, or art. I think there's definitely potential there, right? But I'm just saying the greater majority there's a lot of bad projects, and this will just kind of proliferate because anyone can mint an NFT, right? So good and bad. I do think you kind of experience already kind of a bubble in the NFT market. A lot of them have come down a lot, so it's not I'm not surprised by that, right? So yeah.
So Jacob, how does stablecoin keep low variation in price? I think maybe not so volatile compared to other coins. So what is the technology behind that?
Yeah, so at least for CoinFlex again, Flex USD is 1-to-1 with USDC. So anyone can mint in seconds, just mint Flex USD. And then if they want to redeem, they could redeem every 8 hours for free or pay like a small funding charge to. So it's different than locking up your stable coins with like a more like a middleman party where you could lock it up for 7 days, a month or whatever. So the technology behind it again really is because we have a repo market on CoinFlex. It's created dollar demand, which gets paid to our Flex USD holders, and that's where the yield is coming from. Yep.
Okay. Oh, Lena. Okay, one more question. I think that's our final questions. I think that's almost the end of this part. So one more question for stablecoin. What are the potential risks behind the stablecoin? Although it's so like stable.
I mean, a lot of controversy with USDT, Tether, biggest stablecoin in the world. There's question about do they actually have the reserves? Are they putting into longer term commercial paper, like say 6 months out, or Evergrande or whatever? If a bunch of people, or a large amount want to redeem, do they have the reserves? So there is that question mark on USDT. And again, you don't get interest on USDT. USDC is a little bit better. USDC is a little better in terms of more transparency. For us, we're actually looking to do a complete full audit and then have it on our flexusd.com webpage where you can see every hour as detail about where is FlexUSD. So that's important. Transparency is huge.
Yeah.
I also agree with Kenny that I think stable coins, I think there are some more transparent ones than the non-transparent ones, and there are also some regulated ones or less regulated ones. But I think it's essentially it's a very important gateway to people to get in digital assets. I'd like to add on the NFT side. I'm personally very passionate about like the art side of things, digital art. I see the artistic value and etc. It's backing the real value instead of more like FOMO, fear of missing out, kind of bidding on profile pictures.
Okay. Okay, I will wait like 30 seconds. So if there's no other questions or there's yeah, you can still grab the chance to chat with them. But if you have no questions, 20 seconds, 20 seconds. Yeah, I think transparency is
Yeah, for sure.
especially when after the financial crisis, I think most of the people doesn't trust the banking or the third party, the middleman.
Yeah, for sure.
Okay, I think that's all for today part 3 webinars. So thank you, Kenny, and thank you our special guest right here for joining us. Okay, so yeah, you can still send if you have any further inquiries, especially for Kenny and Ray, you can just send to info@heb.org. So we will refer those questions or inquiries to the speakers and the guests.
I see Richard Din. I know Richard Din.
Okay, so yeah, thank you so much for joining us in the webinar.
How far?
Okay, okay, so we will now have a short few minutes break so I can we can set up the venue again. So see you later, and we will do the summarize of today's webinar later on. So thank you.
Thank you. Is that really Richard? No, it's not. Yeah, whatever. Is it really?
So I will now do this. I will now summarize a bit on today's webinar content. So thank you very much for all of our online audiences for joining us today webinar. The open source blockchain frameworks technology, CeFi and DeFi frameworks and perspective webinar. So these are some of the points from our speakers. They mentioned about how their contents are relevant to you or how this kind of contents can benefit you to upskill your competitiveness in your industry. So from Tommy, our first speaker, the founder of APY Vision, he mentioned that decentralized finance is enabled by code that executes in a decentralized manner and has taken over the news headline for 2021. Additionally, DeFi opened the door to a new breed of investors. Find out how DeFi has created new financial instruments such as decentralized exchange with smart contracts. We will explore the origins of DeFi, what decentralized exchange are, and what liquidity providing and yield farming are about. For our second speaker, Louis, the honorary consultant of CoinUnited.io, he said crypto has already become a new asset class. So crypto are built on blockchains and controlled by code. IT professionals are more tech savvy than the general public. So let's see how this asset class is different and catch the train to financial power. So I'm strongly agree on Louis' point of view. For ICT professionals, it's important to catch up the trends of especially the crypto trends. For our final speaker, Kenny, the head of business development of Conflex, he says we goes in depth into how Conflex enable active and passive capital, having a chance to capture crypto yield through the cornerstone product of Conflex, the Flex USD, world first interest earning stablecoin. You don't have to like lending or borrowing out your coins, but simply you keep buying the Flex USD as a saving. You can generate the income itself. And also we learn about the AMM plus, how the capital can efficiency been yielding farm under the DeFi system. So I would like to emphasize again, today's webinar aims to equip the Hong Kong ICT professionals with the knowledge on the latest digital transformation trends and implementation strategies. Also, we aim to help ICT professionals with knowledge and understanding of the different types of open source blockchain frameworks, protocols, opportunities, and also challenges. We will also explore future development and trends of it. So all the webinar content today we do not provide any financial or investment advices, just to equip all our online audiences on the knowledge of, especially on the open source blockchain framework technology. Okay, so thank you so much for every online audiences staying with us from 12 noon to the final part of our webinar. So please fill in this, scan and fill in this questionnaire. You can drop your comments or feedbacks and rating on different parts, such as how's our arrangement today, how's the rundown of the webinar, how's the content, how's the speaker presentation quality, is it proper for you, is it beneficial to you? So please let us know, and we can like further improve ourselves with your feedback. So please scan and fill in the form.